Okay. Good morning, everyone. So we begin the third session on revenue recognition in AS 115. So far, we have done step number 1, that is what you have to say, identify whether there is a contract in the first place, then thereafter identifying the performance obligation. Okay. So in the performance obligations, we saw why it is important for us to look at the performance obligations. And what is a performance obligation? Basically, it is a promise in the contract with a customer to transfer to the customer either goods or services that is distinct, or a series of goods or services that are substantially the same and have the same pattern of transfer to the customer. So I explained this example also, like a streaming service. So these are each day a distinct goods or services are transferred, but the pattern of transfer is substantially the same, and the goods or services also are essentially the same. So these are also covered in the meaning of a performance obligation. So why is performance obligation essential for us? Because that becomes my unit of account for measuring the revenue. When I say unit of account, I mean that on completion of a performance obligation, the standard requires you to recognize the revenue. So it first becomes imperative for us to understand कि भाई in my contract what are my performance obligations. उसके बाद ही तो हम revenue recognize कर सकते हैं. So this is why this step is crucial. So each and every contract that we are entering into, we have to identify what are the performance obligations. The very first example we discussed of the car with a warranty and a free service for 5 times, then each of these is a separate performance obligation. So that is why the revenue recognition has changed in this particular standard as compared to what we used to do under AS7 and AS9. Okay. So after that, we came to what are known as distinct goods or services. So when I say distinct goods or services, it means that customers should get benefit from each such good, service, or performance obligation is the first criteria. Most of the cases this is fulfilled. In the second case, we have to meet 3 negative conditions. The first one, they should not be part of a single integration activity. They should not be customization or modification. And the last one is they should not be highly interrelated. So not part of a single integration activity. We saw the example of a construction of a dam, bridge, road, railway line, whatever you call it, where engineering, procurement, construction services, all of them were integrated into one single contract. So in that case, though the services performed are distinct, but they are all highly integrated. They are significantly integrated. They are a single integration activity, and therefore it will not be considered as distinct goods or services. Then we came on to customization or modification. We discussed the example of a software. So there the additional software is not being given to you. Existing softwares are getting updated, customized or modified, and therefore no distinct goods or services in that regard. And lastly, goods services should not be highly interrelated. We discussed the example of passenger transportation vis-a-vis the baggage handling services. So these are highly interrelated. One does not exist without the other, and therefore though they are distinct services being performed, they are not distinct in the context of the contract. They are one and the same service only. So this is what do you mean by distinct goods or services. And I had left you with a couple of questions, about 8 to 10 questions to practice, to see what are the performance obligations. I go with the strong sense of belief that you people have done those questions. Okay. Good morning, Vanshika. Good morning, Shankar. Good morning, Deepak, Shailesh, Vimal, Viraj. Good morning. Good morning. Couple of students are not there, I suppose. Okay. So now let us start our discussion. Today's topic is extremely interesting, something which you haven't encountered before under AS9, and at the same time important from examination perspective. Okay, so now let us start our discussion. This is step number 2 only, identifying performance obligations. Today we are going to complete step number 2. Okay, so we start off with option to purchase additional goods or services. Okay. Okay. Now, what do you mean by option to purchase additional goods or services? Basically, this is nothing but the voucher offers that you are hearing of, that has become so common and prevalent these days. You go to the store, you buy something, then they give you a discount coupon saying that, sir, next time you come to the store, we will give you a 20% offer. Next time you come to the store, we will give you a 30% offer on a minimum purchase of so much. This is your birthday month, sir. So next time you come to the store, we are going to give you free purchase worth 2000 rupees. Next time you come to the store, we are going to give you XYZ. So all these are options to purchase additional goods or services. Options to purchase additional goods or services. So let us understand this with the help of an example. We will do the example. I will take you fully through the entire example, end to end. We will understand the concept. We will understand how the accounting used to happen under AS9. How Ind AS 115 changes the accounting, and thereafter we will do a question. You will do a question and tell me the answers as to how revenue should be recognized. From the institute study text, we will take up a question, and finally we will conclude with a very detailed RTP question that was asked in, I think, November 2019 probably. So with that, we shall give a full closure to this particular topic. That is how I intend to go through. Okay. So now let us take an example. Suppose you go to a store, you go to any store. Let us say you go to Reliance Trends. Okay. Let us say you go to Reliance Trends. When you go to Reliance Trends, this is your first purchase. Sir, ये हमारा first purchase है. You did a shopping of, let us say, 10,000 rupees. Okay. Now, when you go to the counter, you will give the goods that you have purchased and you will make the payment. Payment ke time pe, Reliance Trends, that billing counter personnel will say, sir, what is your contact number? So now these contact numbers are a fad. Everybody has to give. They will give some or the other excuse that, sir, contact number denge, invoice will come there, automatically exchange ke liye theek hoga, whatever be the reason. So they ask your contact number. And then they will say, sir, you open your mobile and see, you will get an SMS. What is that SMS? That SMS says 20% discount on next purchase, subject to max rupees 1000. That is maximum purchase of rupees 5000. Means what? See, suppose you buy goods worth 4,000, you will get 4,000 into 20%, 800 rupees discount. You purchase 3,000, you get 3,000 into 20%, 600. You purchase 5,000, you get 1,000 rupees. You purchase 10,000, you will get only 1,000 rupees. Okay, this is the manner in which the coupon is designed. Okay, so the discount is restricted to 5,000 rupees purchase on that 20%, so 1,000. After that, whatever you purchase beyond 5,000, you're not getting anything extra. You are going to get maximum discount of 1,000. This is offer. This is an offer. Okay. So even you have certain, what you can say, certain resorts, they give this. So Suppose you have these resorts like Mahindra or Sterling or whatever they are. You make a booking and then they will give you a food coupon voucher. They will say that, sir, this is a voucher of rupees 2000. You can redeem it when you come to our hotel for enjoying the food and beverage services that we provide, provided that minimum billing should be suppose 4,000 rupees. So in your entire stay, if your billing is 4,000, you present this voucher of 2,000 and you have to pay the differential of 2,000. You purchase, you consume food and beverages of 5,000, you pay 3,000. You purchase 1,000, you are not entitled to the benefit of the voucher because you have not done the minimum purchase. So there are various ways in which these vouchers and discounts function. Okay. So now everybody who is attending, answer me. We will look at accounting under AS9. This is something we have all done. Okay. This is something we have all done. So on the first purchase, what is the sale entry that will be recognized? When I go, I buy goods of 10,000 rupees. What is the sale entry that I will be recognizing? Come on, everybody tell me. Sir, sale entry kya hai? Sale entry will be bank account debit to sales, 10,000. Okay, this is the first entry that is going to be passed. Okay. Bank account or cash bank account debit to sale, 10,000 rupees. Okay. Acha, subsequent purchase kaise hoga? What will be the subsequent purchase? Sir, suppose subsequently you go to the store, and when you go to the store, you do a billing of 6,000 rupees. You do a billing, or let us make it 5,000 rupees. You do a billing of 5,000 rupees. Against that 5,000 rupees, you are giving that 20% discount coupon ka jo SMS hai, you will give that SMS at the billing counter. The billing counter is going to give you, will enter that code or whatever it is, it will enter it into the billing point of sale gateway, and then ultimately the payable amount shown is 4,000. So now I want you to tell me under AS9 for the subsequent purchase, what is the journal entry that you will pass? You have purchased goods worth 5,000. You have received a discount of 20%. So ultimately, the goods are invoiced at 4,000 rupees. So now my question to you is, what will be the journal entry? Sir, एक entry तो clear है, bank account debit to sales. Okay. How much is this going to be? Sir, bank account debit to sales. This is going to be 4,000. This is going to be 4,000. Okay. This is going to be 4,000. Bank account debit, discount account debit to sales. Some people are giving me that answer. Bank account debit 4,000, discount account debit 1,000, to sales 5,000. Now, why are you debiting the discount? What is the nature of this discount? We had discussed two types of discount, if you recollect. One was a trade discount. The other was a cash discount. What is the nature of this discount, this 20% discount which is being given? What is the nature? Is it a cash discount? Is it a trade discount? Those of you who have answered that bank account debit 4,000, discount given 1,000, to sales 5,000. What is the discount which is given? Is it a trade discount? Is it a cash discount? If you say it is a cash discount, then the discount should be spread evenly across all the customers, because everybody does a prompt payment. Karte kya ho? The moment you go to Reliance Trends has no concept of receivables. It is operating on a cash to carry basis. So therefore, paise deo, goods leke jao. That is how Reliance Trends operates. So therefore, when you go to buy, you are not, what discount you are getting is not a cash discount, because everybody does prompt payment there. So that 20% is not a cash discount. Coming to the next one, Many of you are answering it will be a trade discount. Now, if it is a trade discount, the very fundamental lectures of accounting that you had studied in class 11 probably, trade discounts are not recognized in the books of accounts. Recollect, yaad karo, trade discounts are not recognized in the financials. Yes or no? ट्रेड डिस्काउंट कहाँ रिकॉग्नाइज होता है? एंड दिस इज नॉट इवन अ ट्रेड डिस्काउंट बिकॉज यू आर नॉट बाइंग गुड्स इन बल्क, यू आर बाइंग इट फॉर योर ओन कंजम्पशन. तो ये ट्रेड डिस्काउंट भी नहीं होगा. सो दिस इज नाइदर आई कैन से अ ट्रेड डिस्काउंट इन द पार्लेंस ऑफ अंडरस्टैंडिंग, nor is it a cash discount because everybody does a common prompt payment to Reliance Trends at the counter. You are effectively giving a reduced selling price to your customer. So therefore, under AS9, the revenue would to be recognized would be 4,000. Under AS9, the revenue to be recognized would be 4,000. In my humble opinion, discount of 1,000 will not be recognized for the reasons I have mentioned to you. So all of you will agree to these two entries. Okay. Those of you who differ, doesn't matter. The difference is not of importance in today's class. But do you agree with these journal entries on a broad sense? Yes. Is everybody conversant with these journal entries? And have you understood the transaction? Yes. Have you understood the transaction? Anybody has any doubt so far? Anybody has any doubt so far? Have you understood the journal entries? What are being passed currently? How do we do the accounting? Have you understood? Yes. Very good. Okay. So, Vanshika has confirmed. I hope the others also confirm. Yukta, Vimal, Manisha, and Rajiv, Shankar, Shailesh, Deepak. Yes. Hope it's all clear. Now, what is the problem with this entry? What is the problem with this entry? Do you see a problem in this entry? That is the question. Do you see something missing in this journal entry? You have studied Ind AS 115. Okay. Sir, if I studied Ind AS 115, we should understand that we are having to recognize revenue depending on performance obligations being fulfilled. Depending on performance obligations being fulfilled. Okay. Correct, hai, sir. So now, in the first purchase that you do of 10,000 rupees, you go to the billing counter and you give your mobile number and then he says, sir, we have an offer for you that will give you a 20% discount on the next purchase. So now, in the first purchase itself, what are the performance obligations that have to be satisfied? What are the performance obligations that need to be satisfied? Come on, tell me. You have studied Ind AS 115 up to identification of performance obligations. So in the first purchase itself, the first sale by Reliance Trends to you, what are my performance obligations? What is your performance obligation? How many performance obligations are there? Tell me, everyone. Saravanan, Muhammad, Mufita, Ravish, Yedu, Manish, Manan. Kitne performance obligations? How many performance obligations does Reliance Trends have when the customer gives, the customer wants to purchase goods of rupees 10,000? Kitne performance obligations hai? Okay. Tell me, how many performance obligations are there? You have studied performance obligations, so you know that. So now, the first purchase, I'm waiting for answers. I'm waiting for answers. Good morning, Bhaskar. Good morning. Okay. Good, Vimal. I'm looking for other answers. Shruti, Ravish, Shankar. How many performance obligations are there? Okay. Yadu gave the answer. What about the others? Okay. Yes, Rajiv has given the answer. Yukta has given the answer. How many performance obligations are there? Let us assume you are that customer. You go to Reliance Trends, you buy your dresses, whatever you want to buy, t-shirts, jeans, whatever you want to buy. You go to the billing counter, and then the billing personnel, assume that it's a Reliance Trends accounting store. Okay, accounting, you are sitting before the accounts department now. For the accounts department, it is giving you goods. So now, from the perspective of Reliance Trends, what is it giving you? Sir, first one, it is giving you goods. Goods of invoice bolo, MRP bolo, whatever you want to say, you say. It is giving you goods of 10,000 rupees. Is it giving you only goods of 10,000 rupees? No. It is giving you, along with the goods, an offer. It is giving you an offer that 20% discount can be availed on the purchase of goods the next time. Say within 2 months, within 3 months, within 6 months, whatever it is. So you are having an option to purchase. So what is the second thing which it is giving? It is giving a voucher with 20% discount. It is giving a voucher with 20% discount. तो इसको हम लोग क्या बोलते हैं? We call this as option 2. Purchase additional goods or services. Two obligations are there. You are giving a promise to give 20% discount in the subsequent purchase. That is essentially an option. That is essentially an option to purchase additional goods or services. Okay. Now my question is, in this journal entry, the very first journal entry which we answered, bank account debit to sales, bank account debit to sales. In this very first journal entry, is the performance obligation relating to option to purchase additional goods or services given to the customer reflected or not reflected? That is my question to you. Is the second performance obligation visible in the first purchase time journal entry under AS9? Is it visible? In this journal entry, is this performance obligation visible? Is my question. Not reflected. Others, please. Is it reflected or not reflected? No. Remember the very first class, sale of car, free warranty, free services. We had recognized revenue only on sale of car. In respect of warranty and services, we had parked it into a separate account, a contract liability account. We had parked it into a separate account, a contract liability account, and thereafter we had done the recognition as and when the warranty period gets over, as and when the services were being provided. So in this case also, my performance obligations are not reflected in the journal entry itself. My performance obligations are not reflected in the journal entry itself. Correct. तो वो दिखना चाहिए. Secondly, in this journal entry, though many of you said discount, though many of you said it will be cash discount or trade discount, it's not discount. So this would be the entry, bank account debit to sales. But in reality, is this the actual revenue? No, sir. Revenue is 5,000. And as many of you said, the discount is 1,000. As many of you said, the discount is 1,000. Essentially, what is this discount? What is this discount? This discount is nothing but performance obligation to be fulfilled in the first purchase, which is getting fulfilled in the subsequent purchase. This discount is essentially nothing but performance obligation of purchase 1 to be fulfilled in subsequent purchase. Do you agree with this? Do you agree with this? Yes? Yes? Have you understood? Everyone? So now, based on this guidance, let us now make things simple. I will complicate the things step by step. You're going to have lot of questions, lot of comments, lot of things you would be going on in your mind. Let us make things very simple, okay? And slowly we will start to compensate it. Slowly we will start to complicate it, okay? Slowly we will put in more and more of our what you can say, assumptions, estimates, judgments, all those things will come slowly over time. Okay. So now, suppose the person who you are going to Reliance Trends. Now, when you go to Reliance Trends, you buy goods worth 10,000 rupees. You get a discount offer. You tell at the counter, sir, guarantee I will be coming next month also, because we have some event at home. जिसके लिए we have to buy some gift items in the form of clothes, etc. So we are definitely going to come the next month. आप बता दो कि आपका नया collection कब आएगा. Let us know when your next collection will come. If it is due in the next month, we are definitely going to come. So you are guaranteeing, okay, that you are going to come the next month, and the accounts person who is sitting there, he is a billing person as well as he is a learned person in Ind AS 115, let us presume. So therefore, this accounting person comes to know that ye customer guarantee aega next mahina, okay? And let us keep it simple. You definitely come the next month, okay? I'm keeping it very simple initially. So now, when there is a guarantee that the customer is going to come on the first purchase, the entry that Reliance Trends will pass is bank account debit 10,000. ये तो नहीं change होगा. The only thing that will change is to sales or revenue, and the other one is to contract liability. Okay. So now you have guaranteed that you will come and you will redeem that 20%, and you have guaranteed that so 5,000 ki shopping to hogi hi. We have to buy gifts for people. So 5,000 to it will go in easily. I will be spending it easily. So therefore, I will book a revenue of 9,000. I will book a contract liability of 1,000. It is not so simple, but right now I want to make you aware of the fact that there are two performance obligations. That's why I'm keeping it like this. Okay. How this actually happens in future, we are going to see that. But as of now, it's for your understanding. Okay. Subsequent purchase. You go to the store again, buy goods worth 5,000. You go there and then you tell the accounting person, look, as promised, I have come. The accounts person also is very happy. Sir, you have kept up your promise of coming the second time. So we are also keeping our promise of giving you a 20% discount. So now the entry is going to be bank account debit 4,000. The contract liability, this performance obligation of giving the discount is now fulfilled. This contract liability now stands fulfilled, and therefore the entry will be contract liability account debit 1,000 to revenue 5,000. Are we clear with this? Yes. Are we clear with this? Any doubts? Anybody has any doubts here? Yes? Many things are going on. उस पे थोड़ा break लगाओ. Put the brake on that first, because right now I want you to understand that in the very first journal entry, this is what you are going to pass. You are going to recognize a performance obligation yet to be fulfilled as a contract liability. You are going to record this. Yes. So the first entry is, see, you are Reliance Trend store is newly opened in your this thing. So you go as the first one, as a part of your first purchase, you go to Reliance. Now when you go to the counter, you present your goods of 10,000 rupees. The Reliance Trends person is going to give you a discount coupon of 20% voucher the next time you buy. And you tell that person, sir, next month I'll definitely come because I have some event, so I have to purchase the clothes, and therefore I will definitely come the next time. So Reliance Trends fellow knows that this person is going to come the next time. This person is going to come the next time. And because this person is going to come the next time, I am obligated to give a discount of 1,000 the next time. I am obligated to give the discount of 1,000 the next time. So therefore, the very first entry that will be passed is bank account debit 10,000, to sales or revenue 9,000, to contract liability 1,000, because the customer has promised that he or she is going to come the second time. So I am going to recognize a contract liability. Bhai, mere ko problem hi nahi chahiye. I want to be very clean in my dealings. I want to report the fact that 1,000 discount I have to give the next time. Okay. So therefore, this is the entry that will be passed. This 1,000 rupees is a discount that you are going to give in the subsequent purchase. This discount is a performance obligation that you have promised at the time of first purchase itself. So contract liability has to be created. Subsequent purchase, bank account debit 4,000, because you buy goods worth 5,000, but आप discount coupon दोगे ना store पे. You will give the discount coupon to the store, and because you give the discount coupon to the store, you will pay only 4,000. So reverse the contract liability of 1,000 and book a revenue of 5,000. Okay. So this is the very first entry. So Vanshika, did you understand the first entry? Yes. Okay. So Vimal, I'm coming to your discussions. You can keep posting whatever you want. All your queries are going to be addressed in the course of the discussion. Everybody who wants to post, please post, because by posting, one thing is sure, we come to know that what are the things going on in your mind. At the same time, I know what I have to deliver. Okay, so please feel free to post. Don't think that sir is not answering my query, because sir is going to answer your query as a part of the explanation. Okay, sir is definitely going. Shankar has also posted. Deepak has also posted. So now all these queries are coming. All these queries are normal. Everybody who is posting the queries, I'm happy, because you are thinking early morning. Okay, you are thinking on a Saturday morning. That is very encouraging. Okay, so now ये तो हो गया सर सीधी बात. This is very very simple. Okay, ऐसा नहीं होता है. It does not. Okay, so what does this entry reflect? First one, it reflects my performance obligations. It reflects the contract liability. It reflects the number of performance obligation. And what is the performance obligation that needs to be fulfilled? What is the performance obligations that needs to be fulfilled? Okay. Now coming to the next part. In this case, under AS9, this discount was recognized on cash basis. Sir, cash basis matlab it was recognized on cash basis in the sense that I booked a revenue of only 4,000, whereas in fact all of you had correctly pointed out, sir, revenue should be 5,000. Discount book was not possible because it was neither a trade discount nor was it a cash discount. That is why we booked the sales at 4,000 rupees was my humble submission, which many of you seem to have agreed. So I have booked the discount in the second entry by recognizing the sale on cash basis of 4,000, which is actually not right, My sale happens to be 5,000 the second time only, but the entries which are passed does not give me a scope of recognizing the discount. Why, sir? Because here we are following a risk reward approach. The risks and rewards are transferred in the first entry for 10,000 rupees. Revenue book kar do 10,000 rupees. Obligation, don't think about it. Next time the customer will come, wo 5,000 ka goods he will purchase. He has to pay only 4,000. That time we will book the revenue of 4,000. You are following a risk reward approach, risk reward transfer approach, not a performance obligation oriented approach. And that is why AS9 fell short. Of giving a true picture of the transactions. Even in the car sales, if you recognize, what was AS9 telling? AS9 was telling bank account debit to sales, book entire 15 lakhs. Car gayi, car ke saath the risks, rewards, everything is transferred. So therefore, book entire sale of 15 lakhs and then make a provision for warranty or servicing costs. That is what you were going to do. But Ind AS 115 comes and tells us, put a pause, put a break on the revenue you recognize, distribute over the performance obligation, which is what I did in the second scheme of entries. So now the basic thing is understood. Right? Now we shall come and understand all the uncertainties that are associated with this. Acha, coincidentally, these entries will be there for any of the promotional offers that come. Suppose you fly from Delhi to Bombay on Vistara. Then Vistara gives you Club Vistara points. Okay. So Club Vistara points is nothing but option to buy it in the future. Option to buy additional goods in the future. But the option to buy additional goods in the future should be reflected in your obligations. Should be reflected in the revenue recognition that you are doing the first time. And therefore, Club Vistara points, Air India revenue miles. You go to buy goods at Walmart, you are going to be given a card for which 1% of your purchases will be accumulated as points and they can be redeemed and set off against the future. This one, discount offers, 20% discount on second purchase. All these are nothing but an option to purchase additional goods or an option to purchase additional services for which an obligation needs to be recognized at the first point of transaction, which we were not going to do, we were not doing it earlier. So this is the first point. Now let us come to the second aspect. Sir, wo customer hai. Okay, this accounts person will come and tell you because you are becoming an expert in Ind AS 115. Wo customer hai. Merely because you have recognized a performance obligation, the first time, does it mean that the customer is obligated to come? No. It is an obligation for Reliance Trends if the customer exercises the option. Mark my words, it is an option for Reliance Trends if the customer exercises that option. Customer does not exercise that option, you do not have an obligation to deliver that discount. Yare, he has to come and buy goods worth 5,000. Na? Suppose he comes to the store, buys goods of only 2,000. Are you obligated to give the discount? Answer is no. Answer may. One second. This is okay. This is the case where discount is 20% up to a maximum purchase of 5,000. So suppose he buys goods worth 2,000. Are you obligated to give discount of entire 1,000? No. You will give discount of only 20%. That means you will give a discount of only 400. Balance 600 you are not going to fulfill. Balance 600 you are not going to fulfill. Okay, so this is dependent on the customer exercising that option. This is dependent on the customer exercising that option. If he does not exercise, then you are not going to fulfill that obligation. You cannot fulfill that obligation. So sir, kya hoga? What is going to happen to my contract liability? Okay, so basically we now look at couple of other things. These offers, 20% discount on subsequent purchase, they typically come with defined time periods. You have to come within the next 1 month, within the next 2 months, within the next 3 months, within the next 6 months. These things you will generally be giving the vouchers with these timelines. Now, let us understand. Customer does not come for subsequent purchase. Customer does not come for subsequent purchase. You had given this 20% voucher, and this 20% voucher, when you gave, you said that, sir, this voucher has an expiry date 2 months from the date of first purchase. Okay. So what are you going to do? Sir, we will come within 2 months is what the customer is going to tell. As a Reliance person, will you go to the customer on the last day of the second month and tell, sir, you have a discount coupon, please come and buy? Do you do this? Some do. Okay, some stores do that. Some stores do not do that. Do you think you are doing anything illegal? No, it is an option which is given. So suppose customer does not come for subsequent purchase. Then what are you going to do? Sir, the contract liability that we had recognized of 1,000 rupees, the contract liability that we had recognized of 1,000 rupees is not getting fulfilled because customer did not come. Because the customer did not come. And because the customer does not come, the offer tenure has expired. The offer tenure has expired. And if the offer tenure has expired, what are you going to do? You will pass the entry contract liability account debit to revenue 1,000. Contract liability account debit to revenue 1,000. This is on expiry of tenure. On expiry of tenure. You will wait till the last day the customer can come. क्या पता वो रात के 10 बजे आके goods खरीद के जाएगा. Yes, you have to wait till the last day. And thereafter, you will have to reverse the obligation that you had recognized, because now you no longer have that obligation on your head. And since you no longer have that obligation on your head, you will reverse the contract liability recognized initially and book the credit to revenue. Book the credit to revenue. Everybody understood? Yes. Customer, second case. Customer purchases goods worth 3,000. Okay, customer purchases goods worth 3,000. So let us understand. Bank account debit. What is the discount you are going to give? Sir, the discount that you are going to give is 3,000 into 20%, that is 600. So customer is going to give you 2,400 to revenue. 3,000. Contract liability debit 600. Contract liability debit 600. बचता कितना है? 1,000 was the balance in contract liability. 600 is what he or she has purchased, is what is the discount given. Remaining 400 is there. Now, if the tenure is still existing, tenure is still alive, and if this voucher can be carried forward, you continue to carry forward that 400 rupees which is left. You continue to carry forward the 400 which is left. If the 400 rupees, if this is a voucher use, you buy without carrying it forward. You buy without carrying it forward. तो फिर आप बोलोगे, customer will say, should I buy another 2,000 rupees of goods? By customer के लिए it is an outflow end of the day. Yes or no? For the customer, end of the day, it is an outflow. He has to spend extra 2,000 rupees, 5,000 minus 3,000, extra 2,000 to get a benefit of 400. वो बोलेगा, I don't need so many clothes in the first place. So if that is the case, then if this is a one-time voucher without the option of carrying forward the benefit to the next period, then when the customer exercises, you will give 600 discount, and the balance 400, you will again take it to revenue. Balance 400, you will again take it to revenue. Are you convinced with this entry? Are you convinced with this entry? This entry is if the voucher balance is not allowed to be carried forward. So customer has the option to buy worth 5,000. He bought only worth 3,000. So 600 discount you gave, so that out of original 1,000, 600 is fulfilled by virtue of customer coming and exercising the discount coupon. The remaining 400, you are not carrying it forward. So now customer has used that voucher. The voucher does not have any useful life left. So therefore, the original 400 rupees, you will book it as revenue. The original 400 rupees, which the customer did not exercise, will now be booked into revenue. Will now be booked into revenue. Are you clear with this? Yes. Are you clear with this? Yes. Anybody has any doubts right now? Anybody has any doubts so far? So we have discussed option to purchase additional goods, number one. We have discussed if the customer does not come the second time, what will happen? We have discussed if the customer does not exercise the full option, but keeps it as pending, customer does not exercise the full option, then how do you do the booking? Then how do you do the booking? Okay. So this is how you are having your accounting for vouchers basic. Okay. I have not yet begun extensively complicating, but many of you had doubts. Sir, customer did not come, then what will happen? Sir, customer comes but does not buy worth 5,000, buys less than that, then what will happen? Sir, what will happen to the obligation if customer does not come? All these doubts are sorted out. All these doubts are sorted out. Okay. Now, this is the easy part of it. This is the easy part of it. Okay. Now, let us understand a couple of other things. Let us understand a couple of other things. Okay. You are a regular customer at Reliance Trends. Now understand carefully. I am slightly complicating the issue. I'm slightly complicating the issue. See, what did we do? What did we do is, the entry that we passed is, first entry was bank account debit 10,000 to sales 9,000 to contract liability 1,000. Okay. Now understand this carefully. I'm slightly complicating things. This contract liability of 1000, listen carefully, this contract liability of 1000. Okay. Before I proceed, I got the question, what about GST in revenue recognition? Forget it. Don't mix up Ind AS 115 with GST. That is the first step. When you are coming to an Ind AS 115 class, you should leave GST outside the door. And when you go for a GST class, you should leave Ind AS 115 outside the door. Why, sir? GST is recognized on invoice transactions. On invoice, it works on the basis of an invoice. Okay. So for GST purposes, let me tell you, the first time you book, you will recognize a sale of 10,000 rupees on the invoice. And on that invoice of 10,000, you will apply the GST and make the sale on that 10,000. GST authorities will never understand what is contract liability. GST officers will never understand. They will only see one thing. 10,000 ka sale hua hai, 10,000 invoice is done, GST will be booked on 10,000. तो आपको क्या करना पड़ेगा? Big headache. You have to sit with Ind AS 115 revenue. You have to sit with your GST revenue and do the reconciliation. And then occasionally you will blame yourself. What did I achieve by studying Ind AS 115 and GST when whole life I have to spend matching? Okay. So be specialized in one area, leave the other area. You want to jump on both the sides, then you will end up with difficulties. That is the lighter side of it. But honestly speaking, this is how you are going to have issues. You will have multiple issues with this. It's not that it's simple. Okay. Accounting may, it seems very nice. Accounting, it seems very nice. Golden. You will feel that, oh, what a great accounting this is. But when you come to practical implementation, it is going to be extremely difficult, which I am now going to explain further. Okay. Let us now come back to this entry. Let us see how much these issues can get complicated. Okay. Let us see how much these issues can get complicated. Answer me one thing now. This 1000, is this face value or is this fair value? This 1,000 rupees. How did I get this 1,000, by the way? Sir, 5,000 was the maximum sales you could procure. So 5,000 into 20% is equal to 1,000. So now this 1,000 is how you determined this. Now my question to you is, think and answer. Is this 1,000 a face value? That means you are computing it based on the terms of the voucher, or is it a fair value? Is it based on customers' purchasing trends? Is it based on customers' purchasing trends? It is face value. Face value matlab kya? Yaar, you took the maximum possible obligation that is there. Matlab 5,000 he will purchase, 5,000 into 20% 1,000, and you have booked an obligation of 1,000. Aapne aisa kar diya. You did it like this. Okay. So now the question is, what is the revenue recognition principle? Sir, revenue recognition principle is revenue should be recognized on the basis of amounts that the entity expects to receive for its goods or expects to be entitled for its goods or services. It's not based on the amounts actually received. It is based on the amounts expected to receive. And when we say the words expected to receive, I cannot do a face value calculation. I have to do a fair value calculation. And therefore, let us now come to the example that we discussed. Suppose you are not a first time customer, you are a regular customer at Reliance Trends. You have given your mobile number, email ID, everything is given, and उनके पास आपका total history is there. How often you come, when do you buy the goods, what is the value that you buy, within 1 month how many times you come, within 2 months how many times you come, what is the amounts you spend on merchandise, what is the amount you spend on say women's clothes, men's clothes, casual wear, formal wear, this wear, that wear, God knows whatever you get in Reliance Trends, all that patterns are available with Reliance Trends about you. So even they know that if it is a birthday month offer that they give you, whether you exercise that offer or do not exercise that offer, depending on the past trends, they have a trend which is available. They have a trend which is available. And because they have this trend, how are they going to recognize this contract liability? They will have to do a data analytical model of calculation and determine that, sir, this customer, we have observed the trends. The tenure of the option is say 2 months, and this customer comes after every 2 months. Matlab, the customer, he or she does not come within the first 2 months after he or she shops from us. ये हमारा trend है. We have seen that we have the past data to back up our observations. So if your option tenure is 2 months and you have the data to prove that the customer does not come for 2 months, then there could be a chance that, I'm saying there could be a possibility that the fair value of this contract liability will end up to be zero, It's not that you are not recognizing a contract liability. It is that the fair value of the contract liability is zero based on past trends that you have noticed from the customer. Alternatively, let us assume that, sir, whatever the customer buys, the selling price, I mean the goods that he or she purchases within 2 months is typically half of what he or she has purchased. Okay, so she's not regularly buying the same price, but she buys a reduced price. So therefore, let us suppose her subsequent purchases range about 4,000 rupees. Okay, so 4,000 rupees means what? 4,000 into 20%. You will be obligated to book an obligation of 800 rupees. And when you book this at 800, this goes to 9,200. So this 800, 1,000, 500, whatever you are booking is based on estimates depending on past trends, So this is what you are going to do Now, suppose we take this out for one customer. The question arises, sir, Reliance Trend के पास एक customer थोड़े होता है. Reliance has millions of customers, millions na say thousands of customers will be there. So how do I analyze the trends? We have very complex models that are prepared for these kind of analysis. Okay, so suppose a customer is a first time customer. Sir, past data to hai nahi, but they can definitely look for a couple of things. Which age bracket the customer is, what is the trend of the people in that age bracket to come the second time. They will ask a host of other things. When is your birthday? When is your mother's birthday, father's birthday, sister's birthday, your anniversary, your spouse's birthday? All these things they will ask. Why they ask? Because they are maintaining a tracker of when their probable obligations could arise and when they can encash it by making sales to you. when is your anniversary. All these things go in ensuring that sales are given to you, and to back up those sales, they are giving you attractive vouchers. And for these vouchers, for these things, they are going to maintain a database. And this database is going to serve the purpose of fair valuing the contract liability, of fair valuing the contract liability. Are we clear with this? Yes. So you are going to have a portfolio of customers, as Ravish has rightly said, and basis that you are going to analyze what will be the fair value of my contract liability. What will be the fair value of my contract liability? Are we clear with this? Yes, are we clear with this? Any doubts? Anybody has any doubts here? Yes. So far, anybody has any doubts? Yes, Vanshika, Shruti, Shankar, Mufita, Vimal, Deepak, Yadu, Rajiv, Manan, Sumit Jain, Viraj Desai, Manisha, all clear? Yes. So we have to do a fair valuation here. We have to do a fair valuation here. थोड़ा सा और इसको कॉम्प्लिकेट करते हैं. We will complicate this a little more. Yes. Sir, कैसे कॉम्प्लिकेट करेंगे? Suppose you are going to audit the revenue of Reliance Trends. Suppose you are going to audit the revenue of Reliance Trends. And let us suppose that the CEO of Reliance Trends, his remuneration contains an incentive package, and that incentive package depends on how much sales can be achieved. How much sales can be achieved. So what do you think? This contract liability, is it written somewhere? ये इतना liability है, इतना ये है. Is it written somewhere or is it an estimate? Is it written somewhere or is it an estimate? Is it written somewhere or is it an estimate? What do you think? This contract liability. We saw the discussion now. Is it written or do you regard it as an estimate? It is an estimate. So if it is an estimate, do you think the CEO can play around with the contract liability figures to maximize the revenue? Yes or no? Arey bhai, anybody can play around with an estimate to maximize the revenues? Yes, you are having umpteen cases in financial statements where estimates are used. You are having thousands of cases, thousands. Okay. I won't say that it's one or two. Okay. Depreciation, estimate. Provision for bad debts, estimate. Provision for inventory obsolescence, estimate. Contract liability, estimate. Gratuity provision, estimate. Leave encashment provision, again an estimate. Long-term superannuation benefits, again an estimate. Basically, your whole financials is nothing but a collection of some facts and some estimates put together. So, the estimate accounting that is there is something which is very crucial for you and me as auditors when we go to when you go to audit the accounts of these entities. Okay. So, in fact, there is SA 540 that deals with auditing accounting estimates, including fair value estimates, So anybody can play around with estimates. That is the harsh reality. And the harsher reality is the auditee client can play around with estimates because they know where the estimates are. We as auditors, we are visiting guests to the client place. Okay. We are visiting guests to the client place. We will not be having that much area of expertise in their business as they have, because that is what they do on a day-to-day basis. You are an auditor, you are not exposed to the business the way they are, so they know how to play around with these estimates to maximize their profitability numbers. So when you assess the client in terms of audit, when you assess the risks of misstatement in terms of SA 300 series, SA 315, 320, you determine the materiality, your response to assessed risks, all these things should be encompassed in that. What is the degree of estimates they have in estimating the revenue? So that is where your audit planning should go in terms of ensuring that your audit is successful. So these estimates can be played around with. That is what I want to tell you. That is what I want to tell. Now, let us complicate the things a little further. Let us complicate the things a little further. Okay. Now, suppose I have to record the voucher. I have to record this voucher. How did I do the accounting of the warranty sales on the car? Sir, I allocated the 15 lakhs on the basis of standalone selling prices. On the basis of standalone selling prices. You remember this. This example will come every day of our session because it is the basis for explaining many things. So this 15 lakhs is allocated on the basis of standalone selling prices. So now my revenue also should be recognized in similar manner every time. My revenue also should be recognized in a similar manner. So now let us expand this. Okay, let us now expand this. Let us now bring that factor here. Suppose you go to Reliance Trends and the standalone prices of the obligations are goods, discount voucher. Okay, so now discount voucher and goods, you have paid 10,000 for both of them. You have paid 10,000 for both of them. Okay. And is there a standalone price? Sir, I want to buy only the goods. I do not want any discount voucher. So therefore, suppose the value of that is 10,000. I'm making this up for you to understand the allocation. Acha. Sir, can I buy a discount coupon of 1,000 rupees and give it as a gift card to my relatives? Sir, definitely you can. Reliance gives you the option to buy this discount coupon as a voucher to give it to your family persons on account of their special events in life. So, if I have to buy a discount voucher of 1,000, how much do I have to pay? And then the answer is, sir, you have to pay 1,000 rupees. So the standalone selling price of these two obligations is 11,000, for which you have paid 10,000 rupees. So how am I going to do the allocation? On the basis of standalone selling price. On the basis of standalone selling price. You are going to the store and you are coming back with two things. One is goods and the other is a discount voucher. So I have to, strictly speaking, allocate the selling price in the ratio of the standalone selling price of the individual performance obligations. So 10,000 divided by 11,000 into 10,000. You will have to do the allocation here. So this comes to 9091 and this comes to 909. This comes to 909 rupees. So 9091 plus 909. So now when you do the revenue recognition, the entry will be bank account debit 10,000 to revenue 9091 to contract liability 909. This is how the actual accounting is going to happen, because your revenue What is the definition of revenue? It is an amount expected to be received for goods or services. And when you say expected to receive for goods or services, this expectation is based on what, sir? It is based on standalone selling prices. And if it is based on standalone selling prices, we will have to first recognize the standalone prices of the individual goods and the discount coupon code, and then we have to do the allocation of the consideration in the ratio of the standalone prices, Okay, suppose these discount coupons are not saleable, some of them would not be saleable, then obviously this would be replaced with fair value of the discount coupon codes. Fair value of discount codes. Is it okay? Yes. So if this is not saleable, in the market, then you will not have this 1000. Instead, you will replace it with the fair value of the discount codes. The discount codes are, the fair value is what you are going to determine based on past trends. So as an auditor, you are going to have to question if the discount code is separately saleable for 1000 rupees and you are selecting a lower fair value of, let us say, 300 rupees, then you have every right to question why are you not taking the standalone selling price of the discount code and why are you restricting to 300 rupees? Because if they lower this, then their revenue apportionment starts to increase. So the entity will always look for ways and means to reduce the fair value of the performance obligation that is yet to be fulfilled, because they want to enhance the revenue that they are going to report. That is the whole, whole crux behind any entity. They want to maximize their revenue, they want to maximize their profit, and they will go to any means to do that. So they are going to recognize. Okay. So now, okay. So now the question is, I'll just clarify this part. There seems to be certain confusion. Okay. Suppose, let me repeat. Suppose the discount codes are saleable. Suppose the discount vouchers are saleable and they actually have a standalone selling price of 1000 rupees and you pay 1000 and you get that voucher. Then the fair value of that discount code is going to be the standalone selling price of that discount coupon code, which will be 1000 rupees. And then you can do the allocation in the ratio of 10,000 is to 1000. But suppose these discount codes are not saleable. Suppose these codes are not saleable, but goods are saleable. So in that case, the standalone prices will be 10,000 for the goods, and for the discount voucher, you will have to estimate the fair value. And suppose that value comes to 300 rupees, the fair value, depending on your estimates here. If it comes to 300, then what you have to do is you have to allocate 10,000 in the ratio of 10,000 is to 300 and do the accounting. Are we clear with this? Yes. So if that be the case, the revenue that you are going to recognize is going to be 9708 and the balance will be 292 rupees towards the obligation. 292 rupees towards the obligation. When can I follow this? Only if it is confirmed that the discount coupons do not have a standalone selling price. If they have a standalone selling price, you can buy the vouchers and give it to somebody as a gift. then you can go for that as the fair value, because that is what Reliance is selling it for. That is what Reliance itself is selling it for. Are we clear with this? Yes. If they say that no sir, discount coupon to aise nahi milega, you have to buy the goods to be eligible for the discount coupon, then you will have to do a fair valuation of the discount voucher. Okay, of the discount voucher. Are we clear with this? Yes. Sure. Anybody has any doubts? Yes. If customer have to pay for getting discount, customer is not going to pay, Sumit. Somebody else is going to pay, for which you are there to sell that discount code for rupees 1000. Okay. You are going to sell that for rupees 1000. Okay. Somebody, some third party will buy that. So there is a standalone selling price for that discount code. So therefore, you are going to take that as the standalone selling price, as the standalone selling price. Are we clear with this? Yes. Anybody has any doubts? Shruti, Shankar. This is also a fair value. Why? Because it is a standalone selling price. Okay. Probably we are we are going back and forth on fair value because you have still not studied Ind AS 113. Fair value is a market-based measure. Okay, just understand that for now. You don't have to delve into it. In the question, okay, 300 is not understood. Okay, I will explain it one final time. Please understand. Okay. Okay. All right. Now, let us finally give a conclusion to this. I'll try to make it as simple as you can, as possible for you. See, what does the revenue standard tell me? Sir, revenue should be recognized based on the amount it expects to receive for the obligations that it is having. Okay. So in respect of the goods, you have to give the amount that it expects to receive. You have to give the amount for the discount code that it expects will be the value for that. Okay. So based on those amounts expected to receive, you are going to do the accounting. This part is clear. Now, suppose Reliance Trends, you go there and then you tell them, sir, I want to buy goods without any discount offer. Okay. Okay. So when I buy goods without any discount offer, sir, goods ka value, we give it as 10,000 only, nothing else. Okay. So this is the standalone price of the goods. Okay. Now the second thing, another customer comes and says, look, I like the collection in your store, but I don't want to buy for myself. I want to gift it to my cousin. But मुझे उसका choice पता नहीं है. I don't want what I buy for her to go as a waste. So do you have discount coupons? Then they say, yes sir, we have discount coupons. अच्छा, उसका value क्या है? अच्छा sir, suppose 5,000 rupees purchase you do, the discount we give is 1,000. You want to gift that to somebody, then we will be charging 1,000 to you. Okay, then we will be charging 1,000 to you. So you will pay 1,000 rupees, get that discount coupon and give it to your cousin. Okay, so here the discount code also has a selling price and the goods themselves have a selling price. And that is what fair value is all about. Fair value is a market based value. In other words, the market is paying 1000 rupees for getting this discount code. So therefore, the standalone selling price itself is the fair value. You will study in Ind AS 113 that fair value is nothing but a price received. Okay, price received or consideration paid for exchange of assets or liabilities. Okay, so it is a market based value for buying goods or services or selling. Okay, so for transfer of assets or liabilities between market participants at a particular date. That is the definition of fair value, a totally market based concept. So here also these standalone prices are market based concept because you can pay 1000 rupees cash and get a discount code, and you can pay 10,000 for the goods only and not get a discount code. That is also there. So therefore, the standalone prices of this is 11,000. The standalone prices of this is 11,000. Okay, so this is the fair value. I repeat, this is the fair value. And jab aisa hota hai, then what you can do is you will do the allocation in this ratio 9091 and 909, and then you will recognize the revenue. Revenue from sale of goods 9091, discount code 909, discount code 909. Now let us move on to the next one. You are a customer who wants to give the discount code to your cousin for birthday or anniversary or whatever it is. So you go to Reliance Trend store and ask them, sir, do you sell these discount codes? Because I want to gift something to my cousin on the occasion of his or her birthday or anniversary. So do you give that? Then the Reliance person will say, so sorry sir, we do not give discount codes. If you want a discount, then you have to buy the goods. And therefore, if you have to buy the goods, and then only you will get the discount coupon depending on how much you buy, what is the category you buy. Then only we give the discount codes. That means what? That means, are your discount codes saleable separately? Answer is no, they are not. So therefore, if they are not saleable, we have to allocate some amount to the discount code. We cannot say that discount code to kuch hoga nahi, because discount codes actually exist. So you have to determine the fair value of those discount codes, which in our example came to 300 rupees. Goods ka value is 10,000 only. This is selling price. This is estimated fair value. Why estimated fair value? Sir, these discount codes are not saleable. They do not have a standalone selling price. But I have to recognize the revenue based on the standalone selling prices. And if I don't have standalone selling prices, I have to do the allocation based on the fair value. So 10,300 becomes the basis for doing my allocation of 10,000. I will do my allocation of 10,000 in the ratio of 10,000 is to 300. So here the amount will be how much? It is going to be 9,708 and 292. And then you are going to recognize the revenue as well as the obligation accordingly. Is it clear, everyone? Yes, is it clear? Yes, anybody has any doubts? Mufita, did you understand 300? Yes. Okay. Now the question is, sir, when we receive 1000 towards discount coupon from the customer, then why do we need to create a contract liability as we have received the consideration for coupon? You have received consideration for coupon, my friend, but what is this consideration you have received for? It is a consideration towards a future sale. Please be clear. You are not getting 1000 towards sale of goods. You have received it as an advance. You can take it that today I receive 1000 towards sale. Vimal is asking, sir, when we deal in discount codes, and Reliance Trends sells that discount code to a customer, the customer gives 1000. Vimal is asking, do we take this 1000 to revenue or do we take it as a contract liability? Answer is it will be a contract liability. I repeat again, it will be a contract liability because you are getting 1000 right now. Why are you getting 1000 now? Because in the future, somebody is going to pay you 1000 rupees less. Somebody is going to pay you 1000 rupees less. You can think it off like this. Somebody has given you advance of 1000. Another person will come and pay you 4000 for goods worth 5000. So this 1000 that you have received is in effect a mere performance obligation that you are promising to fulfill within the tenure of the voucher. Suppose you got the voucher you gave a voucher of 1000 with a lifetime of 1 month, and that customer did not come even after 1 month. Then you can shift this to revenue. But until the tenure has expired, the customer can come anytime, and therefore you have to take it as an obligation. Are we clear with purchase of additional goods or services? Yes. Anybody has any doubts in what we have discussed today? Yes. I told you this class is going to be interesting. Okay. All right. Anybody has any doubts? Got it? Yadu has confirmed, Shruti has confirmed, Mufita has confirmed, Vanshika, Tanisha is not there today. Manan, did you follow? Ravish, did you follow? Shankar, did you follow? Shailesh, Sharavanan, Mohammed, did you guys follow? Yes. Deepak, did you follow? Is it clear, everyone? Yes. No doubt. Okay, perfect. So that concludes our discussion on additional goods or services. अभी तो सिर्फ discussion खत्म हुआ है. We still have a very beautiful question to solve. Okay. So what is the meaning of additional goods or services? I have explained everything what was there to be explained here. So please go through this as homework. Okay, read this. It's there in your study material. Wahi se I have just copy pasted it from there. Okay, I have treated it as okay. Next. Okay. All right. Last couple of doubts. Sir, if a customer buys gift vouchers at discount from Amazon or Trends, will it be a contract liability for Trends? Of course it will be. Yes, it will be a contract liability because what you have given is a discount code. That discount code is going to give you a reduced consideration in the future. Yes, it is like I have received advance money, and in the future when I sell the goods, I will get the balance money. So it is like advance that you have collected. It is like an advance that you have collected. Okay, so there is no difference in accounting treatment whether it is purchase coupon or a complimentary discount. I suppose by complimentary discount you mean the discount that we are getting when we are purchasing goods, and along with that we get the discount coupon. If that is the case, the difference is going to be in the amounts that you are recognizing, my friend. If you have a standalone selling price, you stick to this. If it is not a standalone selling price, if it is 10,000 without a standalone price, you have to do a fair valuation. Then the amounts will be different. The amounts recognized are going to be different. The amounts recognized are going to be different because the basis is going to change. The basis is going to change. Are we clear with this? Yes. Okay. So go through this for homework. Go through this. Okay. Now let us some small tidbits here and there. Okay, I have completed bulk of the discussion, just some small things here and there. Okay, now see, the important thing is when an entity grants a customer the option to acquire additional goods or services, that option is only a separate performance obligation if it provides a material right to the customer. If it provides a material right to the customer. Okay. So now, suppose you are having a 20% discount which is given to you. A 20% discount which is given to you. Parallelly, okay, parallelly, there is a 5% discount which is going on. Parallelly, there is a 5% discount which is going on. वो 5% discount के लिए code word नहीं चाहिए. You don't need any code. You just enter the store and then you get 5% discount. तो आपका discount, your discount is worth how much actually? Sir, if I did not have the discount code, I would get 5%. Now I got a discount of 20%. That means मेरा incremental portion is how much? My incremental portion is only 15%. So that 15% only will be the obligation that is there. That 15% alone will be the obligation that is there. Okay. So this 15% is a material discount, and therefore you will recognize the obligation to the extent of 15% only, because 5% you are giving without any conditions. 5% you are giving without any conditions, vouchers, coupons, कुछ भी नहीं है. Store में आओ, 5% discount चल रहा है, use the discount and then go. Okay, so that 5% is not going to be the what you can say. You cannot consider 20% as your discount because 5% is anyways going to be given. So 15% is your net effective discount. Net effective discount. Okay. Now, okay. So here you can see, Vimal, this is written. If the option provides a material right to the customer in effect pays the entity in advance for future goods or services, and the entity recognizes the revenue when those future goods or services are transferred, or when the option expires, Okay, so that is done. Next, exception to having an option for future products and services. Okay, fine. Now, let us take another case. Okay. Suppose, understand this. Just understand this. Suppose you go to Reliance Trends, and when you go to Reliance Trends, you bought the goods, you bought it for 10,000, you got the discount coupon, and that discount coupon is entitling you to 20% discount. That discount coupon is entitling you to 20% discount. Now, there is a second thing which is happening parallelly. Parallelly, there is a stock clearance sale which is going on. And that stock clearance sale also is giving a 20% discount on all the products. It is giving a 20% discount on all the products. And now, please pay attention. And now, the terms of the offer are such that you cannot use both the offers together. You cannot use both the offers together. Sir, matlab, suppose I have clothes worth 1000. After 20% stock clearance, the value of those goods is 800 clothes. And then 20% discount. Sorry, 1000 into 80%, 1000 into 80%. So this comes to 640. Okay. Now, what the terms of the voucher tell us is, you can use either this or you can use either this discount. You cannot use both together. आप या तो 20% स्टॉक क्लियरेंस ले लो या फिर 20% डिस्काउंट कूपन यूज करो. बट अपार्ट फ्रॉम दिस, I mean, you cannot use both of them together. आप दोनों चीजें साथ में नहीं कर सकते. So in this case, 1000 into 80%, that means after the discount of 20%, you can buy it for 800. Or if you go for stock clearance sale, then also you are getting 800. Then also you are getting 800. That means, are you getting a material right? Are you getting a material right in this case on account of that option? Answer is no. यार मेरे पास वो voucher नहीं था. Even if I did not have that voucher, I could still get the goods for 800. I have that offer. Now also I am going to get the goods for 800. So in effect, do you have a material right to additional goods or services? Answer is no. What is given to you is just a marketing offer, a marketing tactic. It's nothing more, it's nothing less. Have you understood this? Yes. What is given to you is merely a what you can say, a marketing offer. It's not a voucher in the true sense. And therefore, in these cases, account for the offer only when customer exercises the option to purchase additional goods or services. That means, what are you going to do? Do not recognize a performance obligation, because the entity is not giving you any obligation in effect. It is just saying, drop the prices of all its products by 20%. So therefore, you don't have a separate performance obligation. You are giving a discount of 20% now already, and after this offer has come, then also you are giving only a 20% discount. So therefore, there is no material benefit to you. There is no material benefit to you. There is no material right that is given to you. It is given to everybody. सबको दे रखा है. And therefore, it is not a material right. It will not have a separate performance obligation. It will not give rise to a separate performance obligation. Have you understood? Yes. Yes. Coming to the next one. An entity should allocate the transaction price on a relative standalone selling price basis. This is, we did it 10,000 plus 1,000. We allocated this. If standalone price for customer's option to acquire additional goods or services is not observable, then an entity shall estimate it. This is 10,000 plus 300 that we did. This is 10,000 plus 300 that we did. Because there is no selling price for the voucher, then we have to do it on the basis of an estimate. Estimate shall reflect the discount the customer would obtain when exercising the option, adjusted for okay, that's it. Okay, this you can let it be. Okay, have you understood? Have you understood? Basically, whatever we discussed, is it all there, or is it something different which we have discussed. What do you guys think? Yes, everything is there. Okay, all right. So now what we do is, you want to continue with the questions or you need a break and then we do the questions? How many of you want a break? How many of you want to do the questions? Break or questions? Break. Come on, answer. We are a democratic country. Yes? Okay. All right. ठीक है. We take a 10-minute break. बच्चे सुस्त हो गए. Okay. We take a 10-minute break. We shall continue after the break. Okay. We now have to do the questions related to this. That's it. Okay. So we take a break. 10 minutes break and then we shall continue. Okay. All right. Okay, guys, welcome back. Yes. So, uh, good to go with the questions. Uh, yes. So we start up with illustration 22, which is on your in your study module. Entity sells gym memberships for 7,500 per year to 100 customers with an option to renew at a discount in second and third years at rupees 6,000 per year. Entity estimates an annual attrition rate of 50% each year. Determine the amount of revenue to be recognized in the first year and the amount of contract liability against the option given to the customer for renewing the membership at discount. Okay, fine. So tell me, how am I going to approach this? So you have this gym. First year you get 7,500. Second year you get the benefit at 6,000 rupees each. Okay. Estimates an annual attrition rate of 50% each year. Okay. So now, what is the total expected memberships that it is looking at? First year, it starts with 100. Second year, there will be an attrition of 50%. So 50 will join. Third year, another 50% will leave. So 25 will join. So we are going to have 175 memberships at the end of the 3-year tenure. At the end of the 3-year tenure. And how am I going to recognize the revenue on this? The total consideration I will receive is first year 7,500 into 100. Second year on 50, I am going to get 6,000. Third year on 25, I am going to get 6,000. So this is equal to 6,000 into 530, 3 lakhs, 9 lakhs, 12 lakhs. 12 lakh rupees. Over the 3-year period, the revenue that you are going to get is 12 lakh rupees. The revenue that you are going to get is 12 lakh rupees. Is it clear so far, everyone? Yes. Is it clear so far? Anybody has any doubts here? Bolo. Yes. Come on, tell me. Yes. Now, is 12 lakhs is the revenue for a 3-year period. That means 175 memberships. So therefore, 12 lakhs divided by 175 gives you how much? 12 lakhs divided by 175. So that is your revenue per customer. That is your revenue per customer, 6,857. So revenue per customer that you are going to recognize is 6,857. But how much are you collecting in the first year, sir? We are collecting 7,500. So if you are collecting 7,500, that means the contract liability from each customer is going to be 643. That is 7,500 minus 6,857. That means 6,857. Are we clear with this? Yes? Is it understood? ऐसा क्यों करते हैं, sir? Why do we do like this? See, this is not an option to buy additional goods in the strictest sense. Okay. In the strictest sense, you are not going to buy the goods or services. You are not going to buy the goods, but it is reducing the cost to you in the future. It is reducing the cost to you in the future. But tell me one thing, the nature of services in year 1, in year 2, in year 3, are they same or are they different? Are they same or are they different? Come on, tell me. Okay. Total memberships is equal to 175. Total revenue for 3 years is equal to, I'll just write it here once, plus 50 into 6,000 plus, so this is equal to 12 lakhs. Therefore, revenue per customer is equal to 12 lakhs by 175. So this is equal to rupees 6857. Okay. Now, year 1. I get revenue from 100 customers. Bank account debit. Yes, bank account debit. How many people will pay? Sir, 100 people are going to pay. Okay, so 100 into 7,500. So 7,500 into 100 gives you 7,50,000. Gives you 7,50,000. Is it okay? Have you understood this? Yes. To revenue. To contract liability. This will be 6,857. This will be 6,857. One second, please. Just give me a minute. 50 into okay, contract liability. One second. 175 into 7,500. 13 lakh 12,005. No, 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 no. 12 lakhs. Just give me a minute. 12 lakhs to revenue. This will be 6857 into 175 people. So that comes to 12 lakhs. Now we will have to, this will be 100 into 7,500 plus 50 into 6,000 plus 25 into 6,000. Now what you will have to do is, this is for years 1 to 3 put together. Okay. This is for years 1 to 3 put together. Okay. Now when we come to recognizing the revenue, this is for years 1 to 3. In year 1, how many people are coming? Sir, in year 1, 100 people are coming. Okay. 100 people will pay 7,500. So this gives you how much? 100 into 7,500. This gives you 7,50,000. This gives you 7,50,000. Now, when I proceed to recognize the revenue, it will be at the rate of 6,857, and I will be booking a contract liability at the rate of 643. So 6857 into 100, 643 into 100, so 6857 into 100. Some gap will be there on account of rounding off. We can just ignore that. 685 700, and you are getting 7,50,000 minus 685 700. You are going to book a contract liability of 64,300. You are going to book a contract liability of 64,300. Year 2, bank account debit. 50 people come to pay you 6,000. So 50 into 6,000, this gives you 3 lakhs. To revenue, this is going to be 6857 into 50. So 6857 into 50, that gives you 3,42,850, and the contract reversal that will happen is going to be 42,853 contract liability. And in year 3, 25 people are giving you the subscription. So 25 into 6,000, 1,50,000. To revenue, 6857 into 25. 6857 into 25. That gives you 171,425. So the debit that will go is 1,50,000 minus 171. That leaves you with 21,425. If I add it to 42,850, is it going to come to that same amount? 42,850 plus 21,425, 64,275. Rounding off 25 rupees is the gap, but that's okay. If you take the full decimals, you are going to get the same answer. Contract liability, 21,425. This is how the revenue has to be booked. This is how the revenue has to be booked. Okay. So 100 customers first year pay you. Revenue from those 100 customers will be 6,857 into 100. and then the contract liability will be 643 into 100. This contract liability, what you have recognized, will be used towards meeting the performance obligations for year 2 and year 3. Sir, what is the performance obligation in this case? Sir, in this case, the performance obligation is that you are going to give them the same services in years 2 and 3 for a reduced cost. See, first year 7,500, second year आपने दिया 6,000. You tell me one thing, is the services provided different? No, everybody said the service provided is the same. And if the service provided is the same, then obviously the cost also should be the same. You are not providing anything lower than what you did in the first year. Then why is it that your subscription should reduce in the future? It only means that you are collecting an upfront amount today and using that to meet the revenue obligations of years 2 and 3. And that is why we have to smoothen out the revenue at 6,857. And ultimately, whatever contract liability I had booked in the first year will be met or utilized in years 2 and 3 to give you the final answer. Are we clear with this? Yes, are we clear with this? Anybody has any doubts? Anybody has any doubts here? Yes? Anybody has any doubts? Girls, boys, any difficulty? Clear. Okay. All right. You want to write down these journal entries because this journal entry is not given in your study material. They have only given the 6,857 versus 643 breakup. That's it. Nothing else is given. Okay. All right. Next. Next. Okay, fine. So this is your illustration number 22. Okay. Now let us come to illustration 23. Quite similar to what we have done. An entity enters into a contract for the sale of product A for rupees 1,000. As part of the contract, the entity gives the customer a 40% discount for future purchases up to 1,000 in the next 30 days. The entity intends to offer a 10% discount on all the sales during the next 30 days as part of a seasonal promotion. The 10% discount cannot be used in addition to the 40% discount voucher. So this is like, what is the material right that you have in respect of additional goods or service purchases? Sir, I'm entitled to a 40% discount if I have the voucher. If I don't have the voucher, then I will be getting a 10% discount. So in effect, the voucher is giving me an incremental benefit of 30%, is giving me an incremental benefit of 30%. The entity believes that there is an 80% likelihood that a customer will redeem the voucher, and on an average, a customer will purchase 500 rupees of additional products. Determine how many performance obligations does the entity have and their standalone selling price as well as the allocated transaction price. Determine the standalone selling price as well as the allocated transaction price. Okay. So now don't look at the study module. Just look at the screen. Try to work out what will be my standalone selling price of the performance obligations. What will be the standalone selling price of the performance obligations? Come on, tell me. Not the allocation. I'm talking about standalone selling price. Where is Vimal? Vimal is there? Yes. Vimal, are you there? Vanshika, give me the answer. Manan, give me the answer. Mufita, give me the answer. Sumit, Saravanan, Yadu. Come on, I'm waiting for your answers. Okay. Rajiv, Deepak, Shailesh, Manish, Shruti. I'm waiting for your answers. What is the standalone selling price of both the performance obligations? We have two performance obligation. One is the goods, the product A, and the second is the discount voucher. So what is the standalone selling price of both of them? Yes. Repeat the question. Is there here only? Vanshika on the screen. Illustration 23. Okay. Illustration 23. Yes. Product and discount separately. I need the standalone prices. Product 1000 is correct. Okay, let us do it. So illustration 23. Okay. So first thing what I am determining is standalone price. Okay. An entity enters into a contract for the sale of product A. Along with that, there is a voucher. Okay. So product A. And along with that, there is a discount voucher. Okay. As part of the contract, the customer entity gives the customer a 40% discount voucher for future purchases up to 1000 in the next 30 days. So what am I getting first is a discount voucher, is a product A whose selling price is 1000 rupees. Here there should not be any doubt. So this is 1000 rupees cost. Okay. Now, against this, you are getting a discount voucher. Now, this discount voucher will entitle you to how much discount? Sir, it will entitle me to 40% discount. Now, this 40% discount, is it a true discount for you, the customer who has the voucher? Answer is no. There is a 10% seasonal promotion already going on. उसके लिए कोई कूपन वूपन नहीं चाहिए. You just go and buy, they'll give a 10% discount. So for you, the benefit is how much, sir? For you, the benefit is only 30%. For you, the benefit is going to be only 30%. So first thing is, your benefit is not 40%, your benefit is 30%. So 40 minus 10%. Many of you got this part right. Now, multiplied by. Sir, I am determining the fair value of the voucher. These vouchers, they have not given that it is saleable in the market. So we have to take the fair valuation. So now fair valuation के लिए first thing is we have taken 30% because that is the true discount that accrues to me, multiplied by, see, in the future this discount can be used for purchases up to 1000 rupees, can be used for purchases up to 1000 rupees. Is that 1000 going to be the basis of your calculation? Answer is no. That 1000 is the face value, is the face value, मतलब वो maximum possible है. You remember in our question that we did, in the discussion that we did today morning, what did I tell you? This 1000, is it the face value or the fair value? And all of you said it is the face value. How did you say it is face value? Sir, 5000 into 20%, straight away 1000. It is the face value. But here we have to do it based on fair value. So what they have given that the entity believes there is 80% chance that on an average a customer will purchase 500 of additional products. So your additional purchases is not 1000, it will be 500 into 500. And what is the probability of this, sir? Iska probability is 80%. The probability of this is 80%. So 500 into 80%, that gives you 400, into 30%, that gives you a discount voucher fair value of 120. So 1120 is the standalone price, is the standalone price of your, what you can say is the standalone price of your voucher, 120. With the product, the total standalone price is 1120. Are we clear with this? Yes. Are we clear? Many of you got confused in the sense that you have either taken 500 into 80% or you have taken 1000 into 30%, but none of you took 500 into 80% into 30%. So that is why all of you gave us the wrong fair valuation. So fair valuation, you have to consider ki bhai up to what extent the goods will be purchased, what will be the probability of the customer coming, what will be the benefit I will be obligated to extend to him. So all this is something that we will have to regard it as a fair value calculation. Is it okay? Have you understood? Sir, I don't get why we are taking 30%. Okay. See, right now, there is already a 10% offer going on. Right now, there is already a 10% discount which is going on. You are having a 40% discount code. You are already having a 40% discount code. We are looking at fair value of that discount voucher. We are looking at fair value of that discount voucher. Socho, think about it. You have a voucher that gives you 40% discount. But this 40%, if I did not have this voucher and I go to the store, I will still get 10%? Yes or no? Because of that seasonal promotion that is going on, I will still get 10%. I will still get 10%. Yes or no? So now this voucher is come and I'm getting 40%. But ये voucher कितना दे रहा है आपको? What is this voucher truly giving you? Sir, this voucher is truly giving you only a 30% discount. 10% तो without voucher भी मिल रहा था ना. So understand the fairness of this voucher. The company ने आपको 40% discount specially नहीं दिया है. Company has given you a 30% discount after that 10% जो सबको available है. After that 10% जो सबको available है. So you are going to have to look at 30% as the discount basis. Okay. So is it clear? Sir, why can't we say that either we use 40% or 10% discount? Shruti question वही तो कह रहा है. The question is saying that only. You cannot use 10% and 40% together. If you cannot use 10% and 40% together, that means what? If you use the voucher, you are getting an extra benefit of 30%. You are getting an extra benefit of 30%. Acha, if they had to say 10% and 40% can be used together, Abhi, answer me now. If they had to say that 10% and 40% can be used together, what are you going to take in your calculations? Are you going to take 40% or are you going to take 50%? Think and answer. Are you going to take? If they say that you can use 40% voucher along with the 10% offer, what are you going to take in the calculation? Are you going to take 40% or are you going to take 40 plus 10, that is 50%? Are you going to take 40 plus 10, that is 50%? What are you going to take? What are you going to take? 40. Absolutely right. Don't tell that I will be taking 50%. The voucher is giving you only a 40% benefit. 10% benefit सबके लिए है. उसके लिए कुछ स्पेशल नहीं चल रहा है. That is a marketing offer. That is not a voucher. That is a marketing offer. So if they say you can use 40% along with 10%, the value of the voucher will still remain at 40% only. It will not be 50. It will not be 50. Absolutely right, Mohammed. Absolutely right. Okay. So this is what it is going to be. This is what it is going to be. Okay. Now see, Manish is asking a question with reference to that gym. In the previous example, we took discounted amount 6,000 as money received. Here we will receive 280. Then why the value is taken as 120? Where are we receiving 280? Where are we receiving 280 here? I don't know. I'm not able to see. 500 into 80%. 400. I think 400 into 70%. So you are saying 280. Okay. In that sense, you are saying. All right. Fine. See. Understand. You are going the other way. Who is that? Manish. आप उल्टा सोच रहे हो. Okay. See. You have a product. Understand this. It's good that you guys are asking questions because as far as possible, I can mitigate the doubts. What question is placed by Manish is, see, I tell the question because it's possible that future may somebody may have the same doubt. And therefore, it's best that we clarify it and get it sorted out. Now see, product A, understand. 1 second. Sale. Okay. All right. See, how much is customer going to pay you? How much is customer going to pay you? 500 into 80% into 100 minus 30. That is 70%. Okay, so this gives you 280. This gives you 280. Manish's question is, why are we not taking 280 as the value of the discount, as the value of the discount voucher? Okay. This is from the perspective of the customer. Manish, ये customer की तरफ से है. कस्टमर के नजरिए से. कस्टमर आपको देगा 280 रुपया. Look at it from the nature of the seller. We are in the books of the seller. वो याद रखना चाहिए. We have to remember that we are in the books of the seller. For the seller, the product has a revenue of 500 into 80% probability. There is a possible revenue of 400 rupees subject to the probability. ये discount related नहीं है. This is related to probability. So there is a chance of getting 400 rupees a revenue. Against that 400, the benefit that is given is a reduced price of 280. So today I am obligated to deliver a discount of 120. I am obligated to deliver a discount of 120. Are we clear with this? Yes. In the previous question, what had happened was my customers gave me 7,500 rupees. My customers gave me 7,500 rupees for 1 year of gym subscription. For 1 year of gym subscription. In the future, they are giving me 6,000 rupees. In the future, they are giving me 6,000 rupees. And in the third year also, they are giving me 6,000 rupees. They are giving me 6,000 rupees. Okay. So just a second. Okay, 1 minute. Just give me a minute. I'm just trying to understand how to make him understand. Okay, let us understand. His question is, in the previous case, we had received 7,500, but we had taken the fair value of the revenue as 6,857. So here he is asking, why are you not taking the value of the discount as 280? Because that is what the customer is paying. We cannot take that because of the simple reason, this is not the product that I am selling. This is the discount that I am giving. Okay. So I am valuing the discount voucher. I am not valuing the product. Whereas in this case, what I was doing is I was fair valuing the revenue itself. Because I'm giving the same products and I'm giving the same service over the next 3 years. And therefore, it's best to have the same revenue numbers across the 3 years because I'm not giving anything extra. And therefore, this 120, what is the discount I'm offering ends up being my fair value of the voucher, not of the product. This 120 is the fair value of the discount. This is fair value of the discount, not product. Okay. This is of the discount voucher. Okay. So now we can remove this off. And now let us proceed with the allocation. So now I have my standalone prices and I have my transaction price. So product A, discount. So this is 1,120, 1,120. Against this, how much are you going to pay? Sir, I am going to pay 1,000 rupees. So for this 1,000, I have to allocate it in this ratio. 1,000 is to 120. So 1,000 divided by 1120 into, so this gives you 893. And next one is 107. Are we clear with this? Yes. So you are going to recognize the product A sale price as 893. and the discount coupon as 107 and the discount coupon as 107. Are we clear with this? Yes. Anybody has any doubts? Anybody has any doubts? Yes. Manish, did you understand? Manish, did you understand? Yes. Vimal, Shruti, Mohammed, Ravish, Saravanan, did you follow? Yes. Clear. Okay. ठीक है. All right. Fine. Perfect. So now we proceed to the next question. Next question is very important. Mark this. This is done. Mark the next question as very, very important. Okay. It was asked in an RTP. It is related to a discount voucher question. It's a very nice question. Okay. It's a very nice question. So now KK Limited runs a departmental store which awards 10 points for every purchase of rupees 500, which can be discounted by the customers for further shopping with the same merchant. Unutilized points will lapse on expiry of 2 years from the date of credit. Value of each point is 50 paise. During the accounting period 17-18, the entity awarded 1 crore points to various customers, out of which 18 lakh points remain undiscounted. The management expects only 80% will be discounted in future, of which normally 60 to 70% are redeemed during the next year. The company has approached your firm with the following queries and has asked you to suggest the accounting treatment under the applicable Ind AS for these award points. So first one is, how should the recognition be done for the sale of goods worth rupees 10 lakhs on a particular day? So they are asking for revenue recognition. Next, how should the redemption transaction be recorded in 17-18? The company has requested you to present the sale of goods and redemption as an independent transaction. Total sales of the entity is 5,000 lakhs. 5,000 lakhs means 50 crores. See, how much of the deferred revenue should be recognized at the year end 17-18 because of the estimation that only 80% of the outstanding points will be redeemed. Next, in the next year 18-19, 60% of the outstanding points were discounted. Balance 40% of the outstanding points of 17-18 still remained outstanding. How much of the deferred revenue should the merchant recognize in the year 18-19 and what will be the amount of balance deferred revenue? How much revenue will the merchant recognize in the years 19-20 if 3 lakh points are redeemed in the year 19-20? Okay, so that concludes this question. So please go through it. Please go through it once. Allow me some time. I'll just come. Yes. Is it interesting questions? Is it an interesting question? Okay. Let us not get overwhelmed with the question. See, whenever you see such questions, there are two reactions. First is people panic. ये क्या आ गया, कैसे करने का, क्या करने का. That is the first reaction, which is absolutely normal. Okay. The next reaction that should follow is, the second type of people are, ठीक है, let us try. So the option is, we should be in a position to try it. We should be in a position to try. Where is my friend Shankar? Shankar is there, or he has left for the day? Okay. So now my point is, let us break the question into multiple points, and we shall go on splitting one by one, like how we remove knots. Okay. If you look at all the question at one shot, then we are in trouble. We should not look at the question in one shot. We should split it into small points. Like how I explained today's topic by taking AS9, then the face value, then the fair value, then the allocation. So all the complexities we ran through in the first example, we shall do the same thing right now, step by step. We shall do the same thing step by step. Okay. So now, first thing is part A. How should the recognition be done for the sale of goods worth rupees 10 lakhs on a particular day? Okay. So now this is RTP question. Please note down the answers. Have your calculators next to you. Okay. All right. Good. You did not revert back for quite some time. So I thought you were done for the day. Okay. All right. So now KK Limited runs a departmental store which awards 10 points for every 500 rupees purchased. And what is the sale of goods worth here? Sir, this sale of goods is worth 10 lakhs. So now, this is answer to part A. Points earned on rupees 10 lakh revenue. How much is that? You are getting 10 points for every 500. For every 500 rupees worth of sale. For every 500 rupees worth of sale. So that translates into how much? 2000 into 10, 20,000 points. That translates into 20,000 points. ठीक है? Yes. Value of each point is rupees 0.50. Value of each point is 0.50. Therefore, value of value of 20,000 points at rupees 50 paise per point is equal to rupees 10,000 is equal to rupees 10,000. Are we clear with this? Yes. So now standalone transaction price. Standalone versus transaction price. Goods points. I had purchased goods worth 10 lakhs. I had purchased goods worth 10 lakhs and points worth 10,000 also. So this comes to, yes. But against both of that, I got only 10 lakh rupees. I got only, okay, I got only 10 lakh rupees. So now what we have to do is allocate. So 10 lakh in the ratio of 10 lakhs is to 10,000. This is 9 lakh 90,099. 9,901. 9,901. Are we clear with this? So this is the split. And now to book the revenue, entry will be bank account debit 10 lakhs to revenue to CLP means customer loyalty program. Customer loyalty program. Customer loyalty program. Okay. Done? Yes. अच्छा, मनीष को समझा. Mufita, did you get? Done? Anybody has any doubts so far? Yes, sir. Okay, understood. All right, next. Now, first part is done. First part is done. Now, how should the redemption transaction be recorded in the year 1718? The company has requested you to present the sale of goods and redemption as an independent transaction. Total sales of the entity is rupees 5,000 lakhs. Total sales of the entity is rupees 5,000 lakhs. Okay? Yes? Work this. Read the information and try to work it out. Think. That's right. Vimal has given one part of the answer. Okay. Okay. Acha. How many points were earned during 1718? Sir, during 1718, 1 crore points were earned. And here they have given total sales of the entity is 5,000 lakhs. So this 5,000 lakhs, was it necessary to be given? Answer is not necessary. You could have done back workings also. You could have done back workings also. And they have given to chalo achhi baat hai. You can take it as 1 crore and 1 crore points for 50 crore worth of sales. So can I now say that the sale of the entity is 5,000 lakhs, and the points that I have received is 1 crore into 0.5, that is 50 lakhs. And therefore, for the consideration paid for the goods, I have received 50 crore 50 lakhs worth of consideration. Okay, sir, kaise? Batao. So this is answer to part B. Answer to part B. Okay. Points earned. Points earned in 1718 is equal to 5,000 lakhs divided by 500 into 10 points. So this is equal to 1 crore points. Even if one of this data was not given, we could still have calculated it. Okay. Value of 1 crore points is equal to 1 crore into 50 paise. $50 lakhs. Everybody got this. Now, is this 50 lakhs standalone price or is it transaction price? Is this 50 lakhs standalone price or is it transaction price? For the purposes of revenue recognition, is this 50 lakhs standalone price? What do you think about this 50 lakhs? Is it a transaction price or is it a standalone price? It is a standalone price. It is a standalone price. So Standalone. So my standalone prices is 50 crore and discount value is 50 lakhs. Okay. Discount. Okay. So now goods discount. For both of them, how much have you paid? 50 crores. Allocate it in the ratio of standalone selling prices. Allocate in the ratio of standalone selling price. 50.5 is not your transaction price. 50.5 is what we are 50.5 is merely my standalone price. 50 crore is my transaction price. For 50 crore, I am getting two things. One is the product and the other is the discount coupon. Okay. So 50 crore divided by 50.5 into 50 crores into 50 lakhs. You will have to divide that. We will have to divide that. So this comes to yes. Please check the workings once. Done. Forty-nine lakh 50,495. Okay, 49,50,495. Total comes to 50 crore. Okay. Yes. Are we clear with this? Anybody has any doubts here? Anybody has any doubts here? Manish Kumar Gupta, आपका revenue number is fine. Discount number, just check. I think while typing you made a mistake. Okay, that's it. So I hope this is clear, everyone, so far. Yes. So now the entry that will be passed is bank account debit, 50 crores to revenue. Okay, so this is the first entry that we are going to pass. Bank account 50 lakhs, revenue 4950, liability 49 lakh 50. Done. Now let us move on to the next part. The management expects only 80% will be discounted in future, of which normally 60 to 70% are redeemed during the year. Yes. The management expects only 80% will be discounted in the future. All right. So now think and answer. Think and answer. How many points will be discounted in the coming year? Yes. Come on. See, total 1 crore points came. Yes. Out of 1 crore, 18 lakh points remain undiscounted. The management expects only 80% will be discounted in the future, of which normally 60 to 70% are redeemed during the next year. Okay. So now you can leave 2-3 lines, I mean 4 to 5 lines for journal entries, and then you can write down. Undiscounted points. Is equal to 18 lakhs. Okay. Now, out of this 18 lakhs, the management expects only 80% will be discounted in the future. Undiscounted points. Expected to be redeemed. Okay. So this comes to be 18 lakhs. They have given 80%. Okay. 18 lakhs into 80%, that gives you 14 lakh 40,000. That gives you 14 lakh 40,000. Are we clear with this? Yes, 14 lakh 40. Am I too slow for you to understand? You can have the question once. Yes. Are we clear so far? Am I too slow? I'm going slow so that you can understand, get a correlation link. Okay, so this is done. So everybody has understood that 14,40,000 points expected to be redeemed in 2018-19. All right, fine. Therefore, total points to be redeemed in 2 years. Why 2 years? From the date of accrual. From the date of accrual. In 2 years is equal to which 2 years? That is 17-18 and 18-19 is equal to, see, I got 1 crore in 17-18. Balance is whatever, 82 lakhs plus 14 lakh 40,000. Plus 14 lakh 40,000. ₹96 lakh 40,000 points are pending to be redeemed. Are pending to be redeemed. Yes. Now, deferred revenue on customer loyalty program. What is that? Remember, you had taken 49 crore 50 lakhs. Array, this 49 crore 50 lakhs, we have to book the revenue in the subsequent periods. Yes or no? This 49 crore 50 lakhs, we have to book revenue against this in the subsequent periods. We cannot just have an obligation accumulating every period. We have to reverse and transfer this to revenue in the subsequent period. So therefore, how am I going to do that? How am I going to do that? So deferred revenue on under customer loyalty program, we can determine it like this. Under CLP is equal to, see, total revenue was 4950 495, out of which 82 lakhs have actually redeemed, and it is our estimate that 14 lakh 40,000 will estimate there. Okay, 14 lakh 40,000 is estimate. So this comes to how much? 49 lakh 50,000 495 . divided by 9640 42,11,002. This is the revenue I'm going to recognize now. And this is the revenue that I have deferred. Seven lakh 39,493. So this is how the revenue is going to be booked. No, we cannot take that 0.5. 0.5 is not the revenue that I have booked. That is the value of each point. That is the value of each point. For purposes of booking our revenue, we have to do it based on what is appearing in the books. Yes, based on what is appearing in the books. So this is 7,39,493. Okay, so that takes care of deferred revenue under CLP. Is it okay? Yes. So now I have to book that revenue here. So entry will be liability under customer loyalty program 42 lakh 11,002 to revenue. Yes, 42,11,002. Redemption in 1718. Are we clear with this? Yes, are we clear with this? So what is the revenue you have deferred to the subsequent months? 7,39,493. 739,493. $739,493. Are we clear with this? Bolo. Girls. Vanshika, is it okay? Mufita, is it okay? Did we follow? Sir, please show the working for. I have just allocated this. It will be 49,50,495 into 82 lakhs divided by 9640. What is 9640? That is nothing but 82 lakhs plus 14 lakh 40,000. Okay. I will finish this and then I will take you through the points again. I will finish this and then take you through the points again, because I understand the first time the sessions that happened in the morning was theory. So many of you could understand that, but now when we are clubbing it with numbers, it gets a little painful. Okay, so I'll explain the summary all together once. Okay. Shravanand, this is for you. Okay. All right. Done? Okay. So now I will just explain what is happening in 1718 because the accounting part as such is over, but we will see what is the impact. We will see what exactly is happening. Okay. So in 1718, entity awarded 1 crore points. Okay. 1 crore points were given. That means sale of 50 crores has happened. Okay, so sale of 50 crores has happened. 1 crore points were given. So therefore, customers came, paid 50 crores, got goods worth 50 crores and points of 1 crore. I mean 1 crore points plus 50 crore worth of goods. So what I have to do is I have to allocate that. So the value of each point is given to me to be 50 paise. Yes, the value of each point to me is given to be 50 paise. So 1 crore points we had received. So 1 crore into 50 paise is 50 lakhs. So by paying 50 crores, I got goods worth 50 crores and discount option worth 50 lakhs. So therefore, my total receipt worth value is 50 crore 50 lakhs. Therefore, this 50 crores, I will have to allocate it between the goods element 49.5 crores, that is one performance obligation, and the balance 49.5 lakhs is towards the discount, coupons. Okay. So now this is the first step. So first step, what we do is we recognize the entry. Bank account debit 50 crores to revenue 49.5 crores to liability under customer loyalty program 49.5 lakhs. Now this is the points which I have earned. And therefore, if I look at the next part, out of these 1 crore points, they will be redeemed at some point of time now. So if they are redeemed, should I not recognize the obligations into my revenue? Yes. Okay. All right. So this is question for RTP May 2019 question. Okay. Now, this is 1 crore points you have earned. The customers have earned. So they are going to redeem it. I am in which year? I am in the year 2017-18. Okay. So since I am in the year 17-18, I have given 1 crore points to my customers. Out of 1 crore points, 18 lakh remain undiscounted. That means 1 crore minus 18 lakhs, 82 lakh worth of points got redeemed. Yes or no? So out of 1 crore, 82 lakhs redeemed. The remaining 18 lakhs, I push it to the next year. I push it means what? Customers did not redeem that. And therefore, it is pushed to the next year. I estimate, now they have given, the management expects only 80% will be discounted. That means only 80% will be redeemed. So 18 lakhs into 80%, my estimate is only 14 lakh 40,000 points will be redeemed in the future, and therefore, how am I going to look at it? 82 lakhs redeemed now. This will go in my income. 14 lakh 40 expected redemption in the future. This will be carried forward as my obligation. So therefore, the total obligation which I have booked is 14,50,000, which is nothing but this number here, which is nothing but this number booked at the time of the sale itself. Out of 49,50,000, 82 lakhs, I mean this 49,50,000, I have to apportion it between what is redeemed in the current year, what is being carried forward. So therefore, 82 lakh portion, I estimate that comes to 42,11,000 something, and 14,40,000 we estimate and carry it forward 7,39,493. So this is the revenue that I book right now. Liability under customer loyalty program 42,11,002, and the balance 7,39,000 is carried forward to the next year. Are we clear with this? Yes. Did you understand the summary? अभी तक question खत्म नहीं हुआ है. It's not yet over. We still have the next year accounting to do. But till now, is it clear? 17-18 is done. 17-18 is done. Okay. (17-18) is done. Any doubts here? Recognized? You guys tell me how much have we recognized? We have recognized 7,39,493. This is my deferred revenue. Okay. Deferred revenue. Okay. Current revenue. Current revenue. Okay. So we are booking this. And so this is my answer to part C. Okay, this one. All right, next. So A is done, B is done, C is done. Acha. Now my question to you is, sir, please सोच के जवाब दो. Don't rush to answer. Think and answer. This 14,40,000, is it an estimate or is it? This 14,40,000, is it an estimate or is it actuals? Okay, Ravish is saying one thing. I'm waiting for others because I need you to be absolutely clear what this is, whether it is actuals, whether it is estimate. Okay, all right. 2 gave the answer. Vanshika also gave the answer. What about the others? Vimal, Manan, what do you guys think? Estimated. Yes, it is an estimate. Drill it in your mind. It is an estimate. So if this is an estimate, the other thought should be drilled in your mind is actuals will come, and actuals also will be different than the estimate. So the question should obviously arise, what do we do about the changed estimates, which is what is there in part D, Okay. Now in 2018-19, next year, 60% of the outstanding points were discounted were discounted. Balance 40% of the outstanding points of 17-18 still remained outstanding. So we had estimated that redemption happened only of 60%. So therefore, this is now part D. This is now part D. In 2018-19, recognize revenue for 60% of points. Recognize revenue for 60% of points. Bolo, this is actual. This is actual. Whereas ये जो carry forward हो गया है, this is an estimate. We had written it here. So you will have to fit this in your head that this estimate is undergoing a change. Therefore, actual redemption in 18-19 is equal to 18 lakhs into 60% is equal to 10,80,000. 10,80,000. Therefore, total points redeemed till date is equal to 82 lakhs. This was redeemed in 17-18 and 10,80,000. This was redeemed in 18-19. So this comes to how much? 92 lakhs 80,000. This comes to 92 lakhs 80,000. And what is this? This is nothing but change in estimate. This is nothing but change in estimate. Are we clear with this? Yes, are we clear with this? Now we move on to revenue to be recognized in 18-19. Revenue to be recognized in 18-19. See, in respect of the points 4950, 495. Correct? 4950, 495. What is this? 49,50,495. This is revenue related to points deferred. What we had recognized in 17-18. Okay. This I will have to split it up between 92,80,000 and how many points are left? Can somebody tell me now how many points are left? The points were earned in 17-18. The lifespan of the points are 2 years. So 18-19, 19-20. So they can be carried forward for another year. Utne ka obligation should be pending in my books. Please remember, if I am carrying forward some points, the revenue related to those points cannot be recognized. It will still continue to have to sit as performance obligation. You remember in our question today, 600, 400, we had done the split. And I was telling, if this offer is not over, we can utilize the differential, then it will continue to sit as as contract liability. So now here you tell me how many points of 2017 are still pending redemption as on 31st March. As on 31st March. Okay. How many points of 17-18 are still pending redemption on 31st March 18? Come on, tell me. Vanshika, no. Muhammad also has given similar answer. Manan's answer is right. Manan's answer is right. Okay. Yes. All right. So now, see, we had estimated, look at our workings. We had estimated that 14,40,000 will be redeemed in the future. And therefore, 82 lakhs, which was actually redeemed versus 14,40,000, we had estimated that 96,40,000 will be redeemed, and therefore we did the allocation of revenue accordingly. We did the allocation of this deferred revenue accordingly. Now, just a second. Those 7,20,000 points are pending redemption. 7,20,000 points are pending redemption. We have to look at the fact that we have estimated only 80% will be redeemed in the future. We have estimated that only 80% will be redeemed. So that fact still stands. Okay. That fact still stands, and therefore the unredeemed portion will be 14,40,000 minus redeemed is 10,80,000. So this leaves you with 3,60,000 points. Okay, this leaves you with 3,60,000 points. Are we clear with this? Yes, are we clear with this? See, 92,80,000 everybody understood? Yes. This 14,40,000, how did I get this 14,40,000? Sir, this is 80% of the 18 lakhs. Understand this carefully. ये थोड़ा arithmetic है. 18 lakhs into 80%, we had estimated 14,40,000 points will be redeemed. वो कहाँ लिखा है sir? They have written here. See, the management expects only 80% will be discounted. That means remaining 20% क्या होगा? Remaining 20% will be forfeited. Remaining 20% will be forfeited, and that is why that 49 lakh 50 is not apportioned between 82 lakhs and 18 lakhs. It is apportioned between 82 lakhs and 14 lakh 40,000. Are you able to understand? This 49 lakh 50 is not between 82 and 18. It is between 82 and 14.4. But sir, you will tell, sir, ये तो गड़बड़ हो गया ना. We are understating my liability. This should be 18 lakhs. We have taken only 14.4. That is what Ind AS 115 tells us. We should not go on the basis of face value. We should go on the basis of fair value. Fair value made me think that 80% का ही redemption होगा in the future. Remaining 20% will not be redeemed, and therefore in the course of allocation of deferred revenue, I have taken only 14 lakh 40. Out of 14 lakh 40, 10 lakh 80,000 only got redeemed in the current year. That means in the coming year, see, these points were earned in 17-18. That means with a lifespan of 2 years, they are going to expire in the year 2019-20. So therefore, at the end of 31st March 2018, at the end of 2017-18, at the end of 31st March 2019, I have to estimate those points which are likely to be redeemed in the future, and that is nothing but original points expected to be redeemed, which is 18 lakh 80 minus what is actually redeemed, that is 14 lakh 40. So that gives you 3 lakh 60,000. Are we clear with this? Yes. Do not take 7 lakh 20 because 1 crore was never the basis for allocating 49.5 deferred revenue to the redeemed and unredeemed portions. 1 crore was never the basis. Okay, we never said that entire balance will be redeemed. We are taking a estimate that 80% will be redeemed. That estimate we are holding it true throughout the problem. We are holding it true throughout the problem. Are we clear with this understanding? Yes, are we clear with this understanding? Bolo. Yes. So 3 lakh 60. So now I will have to divide it in the ratio of 92 lakh 80 and 3 lakh 60,000. So this comes to how much? 4950 495 divided by 9640 into 47 65 622. And this is rupees 184,873. But wait a minute. 47 lakh 65 is the total revenue that I should recognize till 18-19. Out of that, how much have I already recognized? Sir, you have already recognized 42 lakh 11,002. तो वो कम करना पड़ेगा ना. That is the revenue which I have already recognized. So 42 lakh 11,002. So therefore, balance revenue to recognize will be how much? 47 65 622 42 11 002. So 5 lakh 54,620. This is revenue to be recognized. This is revenue to be recognized. What is this revenue to be recognized? Sir, you had done some basis for calculating the revenue there. That is, you had estimated 82 lakhs will be, you had done the working saying that 82 lakhs is what we are going to recognize because it is redeemed. So you have recognized 82 lakhs. Now, actual redemption as on date is 92 lakh 80,000. So therefore, that revenue minus what is earlier recognized is my revenue to be recognized in 2018-19. In 2018-19. Is it okay? So 5,54,620. This is the revenue that you are going to recognize in the current year. In the current year. And 3,60,000, this is your unredeemed balance of out of estimate of 14,40,000. Not out, don't take it as unredeemed out of 18 lakhs. 18 lakhs में तो मैंने estimate किया था. What I estimated, only 80% will be redeemed. So therefore, 14,40,000 में से 3,60,000 is what is outstanding. So in 2018-19, the revenue that you will recognize is 5,54,000. So the entry will be liability under customer loyalty program debit 5,54,620 to revenue. 5,54,620. 5,54,620. So that takes care of this part. Yes. How much of the deferred revenue should be recognized in the year 18-19? 5,54,000. And what will be the balance in the deferred revenue? Sir, balance in the deferred revenue will be 1,84,000. कहाँ गया? 873. Balance in deferred revenue. So balance in deferred revenue. $184,873. 184,873. Are we clear with this? Yes. Anybody has any doubts, clarifications? Yes. Shankar, did you follow? Vanshika, did you follow? Muhammad, did you follow? Those who said 7,20,000, did you understand why we took 3,60,000? Yes. Did you understand why we took 3,60,000? Okay, fine. All right. So balance in deferred revenue. And then part E, accounting in 2019-20. $19-20, 1,84,873 will be the revenue. You don't even need to read the question. You don't even need to read the question. 1,84,873 will be the revenue. Are you able to understand why? 184,873 will be the revenue. Are you able to understand why? Simple. 1920 is the last year for the points which were there in 2000, which were earned in 2017-18. 1920 mein either the points will be redeemed or they will expire. Only these two things are there. Nothing will be carried forward. Whatever points are there, they will either be redeemed or they will be carried forward. So if that be the case, then whatever happens, यार जाना तो revenue में ही है. Whatever be the case, ultimately the balance should go to the revenue. So therefore, you don't even need to read the question. You just transfer that 1,84,000 to the revenue. But for our understanding, we will read the question. Okay. Don't do such things in exams. Here I can confidently tell because I have read and solved the question in advance. In exam, just go through it once. How much revenue will be recognized in 1920 if 3 lakh points are redeemed in 1920? It doesn't matter how much is redeemed, how much is outstanding. Whatever has happened, entire balance will go to revenue. Why? Either they expire or they get redeemed. So both of them will take the impact to the revenue. So therefore, entry will be liability under customer loyalty program debit 184,873 to revenue 873. This is on redemption of 3 lakh points plus lapse of 60,000 points. Lapse of 60,000 points. Are we clear? Yes. 3,60,000 out of that 3 lakh redeemed and 60,000 points lapse. 60,000 points lapsed. Are we clear? Yes. Everybody understood the whole question? It is a nice question. It is a very nice question. Okay. Anybody, any difficulty, doubt, queries, questions, mistakes in my working? Yes, the question looks to be long because you are doing it for the first time. Whenever you do anything the first time, it does take time. Okay, it does take time. All right. Now I'm going to leave you with some topics to do for homework. Okay. Long-term arrangements. This is basically like Prime Video streaming, Amazon Prime Video streaming, where you enter into a contract for 12 months. Or you enter into a something longer is there than 2 years, 3 years, 4 years. If that be the case, then how are you going to do the revenue recognition? I told you it's basically the same revenue, the same obligation that is discharged over the period. Same pattern, same benefits, nothing is new. Treat it as a single pattern and do the accounting. Place what you can say, place time milestones in respect of time. You cannot say I have a 5-year contract for streaming services, I will book the revenue after 5 years. Then your whole thing will go for a toss. The profit and loss account will go for a toss. So you will have to put milestones in terms of time. So for each time that has elapsed, proportionate revenue will be recognized. That is the meaning of long-term arrangements. Just go through it. Nothing is there. You can have a look at this for homework. Okay. The next one is consignment arrangements. This also you all know. Consignment is nothing but sale through agent, where I sell the goods, I send the goods to my agent. Agent does onward sale. So when I send goods to my agent, that is not a sale. That is what Ind AS 115 is telling. Uske liye we did not want a standard to tell, but anyways the standard chose to put that in the content. So therefore that is there. When I send the goods to my agent, it is not going to be counted as a sale. And because it is not going to be counted as a sale, you cannot expect revenue to be recognized at that point of time. So they have given certain indicators. Okay, go through these indicators like I am responsible for pricing. I am responsible for inventory risk. If the customer has any issues with the product, I am responsible. So all these indicate that principal is somebody else, agent is somebody else. Agent can book only his commission. He cannot book the revenue from sale of products. That revenue from sale of products is my revenue, not his. So this also just go through it for homework. Nothing is there. It's very simple. Okay. And here also you have similar context, that is principal versus agent, where the presentations for 115 Vanshika will be updated after the class is done. Okay, will be updated after I finish 115, that is after Tuesday. Say on Tuesday evening or Wednesday you will get the presentations. Okay. Now this one is identifying performance obligations, principal versus agent. Similar to consignment, but here they are specifically talking about principal agency contracts. So it need not necessarily be goods. It could also be in the service sector. Like for example, Make My Trip is there as an agent for airlines and hotel companies. So who is the principal? Who is the agent? What revenue MMT should recognize? What revenue the hotels or the flights should recognize? Who is responsible for honoring the contract, performing the contract? That is what you will have to just understand. It's plain simple understanding. This is MMT hotel and flights contracts. Okay, I'm giving the examples here. So when you are going to study this, you will have to study with the help of these examples in mind. It is going to sort out your doubts, or it will help you to gain better clarity. Okay. So go through this one illustration, two illustrations. That's it. You can also go through non-refundable upfront fees. I have to update the content. Non-refundable upfront fees. Okay. So here we could be having some non-refundable fees, which is going to be categorized into two parts. Okay. I'm just going to refer that from the study material. 1 second, please. Okay. Now, I will explain the example to you. That example is going to help you understand what do you mean by non-refundable upfront fees. I have two examples for both of them. You will clearly understand with that. This non-refundable upfront fee, see, earlier we had a tendency, non-refundable fee, milte hi recognize the revenue. The moment you get it, you recognize the revenue. Ind AS 115 says no. You have to check whether there is any performance obligation. So let us take an example. You are porting your connection from Airtel to Jio. Now, when you are porting your connection from Airtel to Jio, Jio is going to charge some activation fee of 300-400 rupees. That activation fee is to ensure that your SIM card of Airtel gets deactivated, the number is ported to Jio, and when you get the corresponding Jio SIM card, the same number should catch the signals from the Jio towers and not the Airtel towers. So there is this performance obligation that needs to be fulfilled. That is deactivation of Airtel, porting the number onto the Jio network, and giving a new SIM that ensures that it captures the Jio signals. So here the performance obligation is this porting service, for which you are paying, the customer is paying a non-refundable upfront fees. And then you do the recharge, then you do the prepaid recharge, or thereafter you enter into the postpaid bill cycle. So now, when you are having this upfront fees relating to activation, when should I recognize the revenue? You tell me. should I recognize the revenue immediately on the receipt of the upfront fees, or should I recognize the revenue once the porting activity is complete? Once the porting activity is complete, what do you think? What do you think? How should you recognize the revenue? Once the porting is done, should I recognize, or should I recognize when I receive the upfront non-refundable fees? कब recognize करना है बोलो? You will recognize once the porting is complete. Sir, porting normally happens the same day within 3 to 4 hours. Okay, so it won't be much of a challenge much of a challenge. But suppose you had ported it on 31st March, end of the day, then the porting might move to 1st of April. So by 1st of April, you will have the porting that is complete. So in that cases, you will have to book the revenue on 1st of April. You cannot book it on 31st of March. So that is one example. This is porting fees. Okay. Porting fees in telecom industry. In telecom industry. Okay. The same example is there as an illustration you can go through. Now, I was thinking of an example for this one, but during the cutoff period, it is just an advance. You have paid the money. Suppose the network does not port, you can go to the Jio store and tell them, boss, I gave you the money. You please either do the connection or refund me my money back. I will go to Airtel and reinstate my connection. You have that choice as a customer, but you have to wait for that 4 to 5 hours. That 4 to 5 hours, which particularly if it is on a month end or an year end, then the revenue slips to the next period. You have to ensure the slip happens to the next period. It cannot happen on 31st March. On 31st March, what you have paid constitutes only an advance. It will become revenue when the porting activity gets completed on 1st. The cutoff period, the waiting period, is the period when the receipts that you have made sit in the balance sheet as an advance, as a contract liability. It will move to the P&L on 1st of April when the porting is complete and you have done your first recharge, or you come on the postpaid payment cycle. So that is the treatment of the cutoff period. Now, when you come to the next case, you have received an advance payment for future goods or services. Let us take an example of convenience fees. You have booked airline tickets on Make My Trip or on airline portals also. Today you go log in and you can check on Indigo website, or you can check on AirAsia website, or you can check on any website. They charge 350 rupees convenience fee. What convenience? That you sit and get it done from your house. But even if you go to the airline counter and book, they will still continue to charge. So this 350 rupees is basically a convenience fee for meeting all that gateway charges, etc. What is their administrative cost? See, when you make the payment through a credit card or a debit card, the money typically goes and sits on the payment gateway. And then the gateway pushes the money back to the account of the airline company. So for this transaction, the gateway is going to charge some fees to AirAsia or Indigo or Vistara, whoever it is. So this transaction of payment gateway is an administrative cost for which the airline companies are collecting a convenience fee from you. Is this convenience fee giving rise to any goods or services to me, the customer? Answer is no. The convenience fee is not resulting in any performance obligation. It is a fee that is meant to meet the administrative cost of realizing the payments that the customers have made. And therefore, This upfront non-refundable uh, uh, convenience fee cannot be a revenue immediately. It will be recognized as a revenue only if, number one, the customer takes the flight, boards the flight, reaches the destination, obligation is fulfilled, recognize the revenue. Number one. Number two, if the customer cancels the flight, the refund will be made excluding the non-refundable portion. The non-refundable convenience fee is never refunded. So at that point of time, when the obligations are cease to exist because of cancellation of the ticket, at that point of time, you will have to recognize the revenue from that non-refundable upfront fees. Until then, you cannot recognize the revenue even though it is a non-refundable portion. So these are the two examples you have to remember when you are going to go through these questions. One is the porting fees, which everybody understood. Second is convenience fees, which is paid for meeting the administrative costs of the respective airline companies. But the revenue cannot be recognized at that point of time because there is no performance obligation fulfilled. So when the customer flies, that time the obligation fulfilled, that time you book the revenue. Or the second scenario is you recognize the revenue only when the customer cancels the booking and the fees becomes payable. The fees becomes payable. Are we clear with this? Yes, are we clear? So go through this, these 2-3 points, what I told: consignment, principal, agency, and non-refundable upfront fee. Just go through these 2-3 points today. It should not take more than half an hour, in my opinion. Okay, more than half an hour, 45 minutes, it should not take. Apart from that, so with that, we are concluding today on step number 2. We are concluding today on step number 2. Tomorrow is a very, very important class because tomorrow I'm going to take step number 3, that is the consideration. The next 2 steps are of critical importance. Critical means absolutely critical. अभी तक तो जो किया है, we have only made the things ready on the platter. हमने चीजों को सज धज के प्लेट पे रखा है कि भाई दिस इज इंड एस 115. नाउ द थिंग इज गोइंग टू बिकम ईज. नाउ द थिंग एक्चुअली स्टार्ट्स. अभी तक तो हम ऑब्लिगेशन ही सेटिस्फाई कर रहे थे, ऑब्लिगेशन ही आइडेंटिफाई कर रहे थे. वी आर ओनली आइडेंटिफाइंग द ऑब्लिगेशंस. नाउ द एक्चुअल थिंग स्टार्ट्स वेयर वी टॉक अबाउट व्हाट इज कंसिडरेशन. How do I allocate the consideration to the performance obligations? The next 2 steps, step number 3, step number 4, absolutely crucial. Tomorrow I will be trying to complete both of those steps for you so that on Tuesday, all I have to do is recognize the revenue as and when the obligations are fulfilled. That is what is the last step which I intend to take on Friday along with service concession arrangements. Okay. So tomorrow's class, nobody should miss. It doesn't matter if you have missed today's class. Those who are not attending, when they watch later, probably it doesn't matter. If some of them are your friends, please call them and tell, sir said doesn't matter if you have missed today's class. Tomorrow's class, if you attend also, it is adequate, sufficient, most important. Tomorrow's class is extremely important. So please attend, be fresh mentally, physically for tomorrow's class. Okay. Thank you, everyone. I extended a lot of your time. Thank you for your patient hearing, and see you guys tomorrow. Tomorrow the class also will be long. Okay, but we have to complete it. Okay, so thank you, everyone. It was great interacting with all of you as usual, and I look forward for tomorrow. Okay, see you, Shankar, see you, Shruti, Vanshika, Sumit, Mohammed, see you everyone, Manish, see you guys. Okay, so that's it for today. Thank you. Thank you. ठीक है? Okay, sir. Hello.